Test, test, test. All right, there's my audio. Let me get my chat going. And we will kick this thing off, guys. It's good to be back. All right, I'm going to be streaming now on Mondays or Tuesdays. Haven't decided those two. It's going to be one of those 2 days. And Friday for the final hour of trading. I wanted to be here at 2 o'clock, but for those of you who know me, who follow my channel, you know that I homeschool my daughter. I am a homeschooling dad. And sometimes projects just, you know, they just go long and you're having fun. You get caught up. But the final hour, I always trade the final hour. All right. This is usually the most important times for me is around noon. I mean, of course, the pre-market, you know, checking what the market is doing, the opening. And then, of course, you know, then I come back and check around noon. Around lunchtime, I usually check in on the iPad, see how the market is doing, how are my positions doing, make a little bit of movement if I need to, you know, if something's, you know, kind of looks like it's, you know, it's in a good target area to pick up, then, you know, maybe I'll make a trade or two. But really the final hour is the most important hour for me. That's when I start really going through my portfolio, closing out of positions that, you know, maybe they're done. Most of the time the positions, you know, I will monitor them, and of course on the final hour, that's usually when there's a lot of activity in the book. That's what I'm saying. So just want to make sure that my chat is looking good, and I'm running a little hot on the mic. It seems like it's pretty loud, so you know, if the mic is loud, let me know. Let me lower this the CNBC a little bit. Okay, just for now. Guys, I got a new setup. I'm always figuring out a better way to do things. Okay, usually until you're finally comfortable with everything. Okay, but I've been trying to figure out how I can do this workflow for a while. I wasn't streaming, but of course, I love streaming, and I knew I was going to get back into it. So the wheels were turning, thinking, you know, well, how can I better my workflow a little bit? And so I made a couple of updates, I got, you know, I got these updates going now, and it's very, very comfortable. I got to say, just talking to the mic has been, you know, it's always, it's a refresher. You know, you're basically getting your thoughts on what's going on in the market out loud, vocally. You're taking them from your mind and letting them come out through your mouth. And, you know, it's just like writing. Okay. It's a good exercise for me. So I'm really glad. I'm really happy that I'm back doing this. And now I'm streaming on 2 platforms live. I am on YouTube and I am on Twitch. Okay. I'm going to let both of them compete, and maybe I'll keep them both if I'm getting good viewership. But if, you know, if YouTube is kind of lacking, then I'm going to go, exclusively on Twitch. Okay. And just do it that way. But I want to give YouTube a chance to see what, you know, what can they do? I mean, hey, you know, why not? You know, you got two opportunities. The reason I haven't gone exclusive with Twitch though is because once I become a partner or whatever that is, I can't do YouTube. Okay, I have to be exclusive with them. And before I pull the trigger on that, I want to experiment a little bit and see, you know, again, how is dual streaming? How does that affect the streaming? Do I get more viewers? Hopefully, I get more viewers, because the whole point of this channel is to share my experience, share my trading world with you guys. So the more people watching, the better, the stronger the community gets. So I just fired up the camera, just fired up the stream. Everything looks pretty good. Okay. I'm going to try to, I don't know if I have time. It's already 3:30. I'm going to try to do some reviews, but I don't think I'm going to have time. Okay. Cause I'm going to be doing some scanning, and really, guys, you know, sometimes that final hour, if I start right at the hour, it almost seems like I don't have enough time. Okay. Usually I'm kind of towards the last 5 minutes, I'm really rushing. So I don't think I'm going to be doing scans within, you know, the live, the final hour, but probably after the market closes, you know, we'll do a couple scans here there. I'll open up the room. Let me make sure that I got, the chat going. Got Sheeny in the room. What's up, Sheeny? Good to see you, man. Welcome, welcome. Good to have you, man. Thank you so much, man. You've been like coming in the room since I first started. So seeing your name pop up, man, it's always a special thing. Thank you so much for coming in the room. I am playing options. Well, I'm experimenting. Okay. I really feel like, I mean, the best thing to do, man, honestly, this is something you're always going to do. Trading is a matter of experimenting. You're not, you're always going to trade. You're going to come up with a strategy and a method, but there's always, at the end of the day, I always ask myself two questions. Okay. How could I have traded better? Okay. And what mistakes could I have avoided? Okay. It's basically, you should always ask yourself that. Okay. What mistakes could I have avoided, and how could I trade it better? How could I made more money? And one of the things that I'm noticing is, of course, there's a lot of options activity. I've always tried to wrap my head around options, always tried to play them, but they've just never worked out. I'm going to be trading options alongside with some of my positions just to see how they behave. The big thing for me is this. In all of my positions, okay, I really want to know, how much am I going to lose? That's the first question I ask when I get into a trade. What is my risk? How much am I going to potentially lose on this trade? Okay, because I don't know where it can go, but I do know that I can, how much do I want to lose on it? So with shares, it's very easy to get out. You can get out of some of these positions at 1%, and then you're done, you're out. But what is that 1% equal into options? If that 1% is 100%, it's not going to work, because then it's almost like an all or nothing kind of trade. So I'm experimenting. All right. I'm experimenting. Because here's the thing, I've always felt like my positions more or less, only maybe 40% of the time I have to be right, maybe even 30 if I stretch it. Okay. But I don't need to be right the majority of the time. That's never been the goal. The goal has always been to have my winners be much larger than my losers. So I want to go back to options again and trade them alongside with my positions and see, okay, what is the average loss? Okay, because again, if it's like, look at this put right here. All right, this is Colgate. My Colgate position is up. I'm up 0.15%, nothing. Okay. But I'm up in that Colgate position. I'm still down 5%. Now 5% is a lot. If I was to actually allocate, like the way I allocate my capital into the shares, into options, it would be a lot. But obviously with options, you're controlling a lot more shares with a small amount of money. So that's the benefit there. But anyways, I'm experimenting. I want to, just do a few positions. Okay. I don't want to go crazy with it, but, I'm going to give it another chance, man. That's how trading is, dude. Even with trading, when you wipe out, people are like, I'm done. I'm never trading again. But if you love the game, that's not true. You're going to come back to the table, scratch your head and figure out, okay, what did I do wrong? All right. Let me try it again. So that's where I'm at with options. And we'll see if it works, if it doesn't. Yeah, for sure. For sure. The biggest thing when it comes to options, again, is it's hard to know how much am I going to lose on the trade. Because if I say, okay, you know what, if I make the trade with Colgate, all right, and I'm going to be setting some of my stops on some of my positions right now because I don't have them all set. But I know with Colgate, I'm basically going to get around, I'm going to get out here around 80.71. Okay, right there. That's where I'm going to get out. So that pretty much is about 1%. Okay, I'm risking 1%, 86 cents. It's easy to know exactly how much I'm going to lose with shares, but it's been hard for me to figure out exactly how much am I going to lose with options, because I don't know. It could be 15% or 100%. I don't know. That's what this whole experiment is about. Just to see, how are the losses in options? Because if I can get out with options that just down 20%, which in options is not bad, that's cool. But if it's 100%, then that just won't work, because then I basically have to get almost, well, I don't know. Anyways, I'm just babbling. So let me go ahead and get into these trades real quick. Let me see what my positions are doing, because I got a couple things open here. Wells Fargo. Let me see here. This is I'm long on Wells, and that one I would have been out on, but I didn't put my stop. I didn't put my stop in there. So with Wells, I'm going to go ahead, and that won't be phasing out. Let's close that position. Let's get out. Guys, also I need to actually, I might just use it like this. I might just actually have my Streamlabs and be able to see the chat on here. But I can't type back, so I need to, I'll have to open that at some point. But anyways, let me go ahead and close out of Wells. And let me see here. By the way, how is the audio? Because I can't hear my. Let me know if you guys hear an echo on the audio. Hopefully there's no echo, because I don't always want to wear the headphones. I like the headphones, but to always have them on is kind of a headache. So let me see here. All right, so let's get rid of Wells. All right, so let's see here.
So you said you're long the oil companies. They're all up today, every one in the S&P energy sector, but some more than others. Baker Hughes surging 6.4%, Occidental. Which names are best positioned for this price rise in the current environment?
Well, if it's going to be a Ukraine invasion, you worry about refining because it's going to be bad ultimately for demand and for prices spiking on China. So you do worry about the refiners. But
no echo. Okay, cool. It stopped when you there's a weird ticking noise.
they all make a lot more money.
Oh, so
Obviously, it's just pure free cash flow.
I wonder what that ticking noise is.
As I said, we're not happy about it.
I'm gonna have to figure this out. All right, so I'm out of my Wells. All right, so I'll have to do that troubleshooting once I'm done with my positions here. Hopefully the ticking is not like too bad. I think I'm just gonna have to get a different mic. This mic has been giving me some issues, unfortunately. I love the glow of it. It has like a nice little glow, but I might have to, yeah. All right, so let me see here. I also got AEP. What's going on with AEP? Okay, so this is one of my longs. Let me set my stop. All right, so that one is there. All right, so this one's pretty good. It's down like 1%. Not a big deal. This is American Power. We got a nice uptrend. It started to consolidate. As long as it doesn't break the lows, I'm fine with this one here. Okay, I'm picking this one right at the low of the channel. And just to show you guys what I'm talking about. Let's see here. If I go here, let's see how. Make sure this. All right, so you guys can see the trend, and obviously I'm picking this up right here, pretty much at the end of the edge of the channel. So just watching this one closely. All right, if it busts, then I'm out. Okay, but as long as it stays within this range right here, this is going to be good. Okay, this is fine. Okay, as long as I'm buying it here and not here, definitely not here. Okay, unless it's breaking out. If it's breaking out, even if it's kind of moving through the channel and it breaks out with enough power, that's fine, because I like this trend here. If it's consolidating, it could just be giving it some room to go up. So I'll just I'll play along. But I like my entry on this one. Okay, because again, I picked this up at what you can see right there, entry 88.38. All right, so basically right about here. All right, not that bad. And I'm risking on this one, I'm risking about 1%, give or take. Okay, so it's nothing bad. It is breaking through that 50-day moving average. You guys can see that. Okay, but I think it's going to get over it quick. But if it doesn't, okay, if it comes down again, I will be out before it even travels to the 200-day moving average. Okay, so the whole thing is, I don't mind taking a trade. I'm not, if I'm gonna be wrong, I'm gonna be wrong quick, and I'm gonna be wrong fast. Okay, I don't want to stay wrong. I always say that. Okay, that's very important. It's not horrible. Sorry about that, Sheeny. I'm gonna get this mic figured out and see why it is doing that. Like I said, this thing has been. It always gives me some weird little issue. I'm not sure why. All right, so let's see here. That was American Electric Power. All right, so I have that one set. Let's go into the next one, Kimberly Clark. This one's getting. This one's getting really close to my stop. Okay, I'm really like on this one. I only want like 1%. So this one may be stopped out. Yeah. All right, so let me go on to the next one. We'll just kind of if that one stops, it stops out, and that's the end of the trade. And we'll continue watching. So I have AEP, I have Kimberly Clark, Colgate. What am I doing with Colgate? I've been short on Colgate. This one's looking pretty good. Just going to be setting. Actually, you know what? I'm going to do this later, guys, because I have 15 minutes. So I'm just going to glance at my positions really quickly. Colgate is looking good. I got 3M looking pretty good. Okay, short on 3M. That one's looking fine. FedEx took this one this afternoon at around noon, and this one really came in. All right, so this one's already up like almost 2%. This one is breaking down nicely. We got our trend, okay, which is starting to form here. So a friend of the trend. All right, so FedEx is looking good. And Sheeny, I know you mentioned about scaling. I will address that in a second, and we'll talk more about that because I think that's an important concept for sure. And I will be scaling into more, like you see here with Matt. All right, so Mattel. This one's looking all right. Okay, not bad. I'm short on this one. Now you see you have an uptrend here. Okay, so it'd be like, well, wait a second. You just said the trend is your friend. The trend is going up. Why the heck are you shorting it? Well, I don't think one. So there's different setups. All right, there's different styles. Like when do you kick? When do you punch? When do you grapple? Okay, When do you throw your opponent? There's different things. No, in this one, yes, the trend is up, but you pretty much just got yourself a pop. All right, you got a crazy pop. I think it's going to fall back within its range. So if I go back here, have a look at that, okay? You see this here, okay? And I love using the Danchin channels, okay? There's different ones you can use. You can use an envelope channel. You can use the Keltner. Some people like the Bollinger Band, especially if you're playing options. That's a thing. But if you see here, okay, on the channel, whatever channels you're using, but it spiked up really big. And I also use Fibonacci, okay? I don't use too many things, but there are a few indicators that I go to. Otherwise, you're just, you'll have too much to look at. You'll confuse yourself. But anyways, this shot up really big, and I don't think it's going to hold. So I'm taking a small risk here. If it continues to move, I'm going to get out of the way, take a small loss. But the risk to reward here on Mattel is great. All right, look, I'm risking right now basically like, let me see here, about 3 to 4%. Okay, for the potential to maybe be around 20%. Okay, I mean that's pretty big here. But even if it comes down to its regular, the median of the channel. Okay, so Kimberly Clark, that one just got stopped out. Anyways, look, if it just comes back down to the median of the channel, that's 10%. All right, so weigh that out, 3 to 4% for about 10%. It's not bad, okay? It could be better, but that's not bad. That's still, still pretty much in your range. So this is just kind of a counter trend trade, okay? Counter trend trading. Sometimes I do it, sometimes I don't. But this is an example of 1 a.m. And so we'll continue to watch. Let me go back here. Damn, it's already like 5. I tell you, the market goes by so fast. Like they say, time flies when you're enjoying something, guys. And I love these markets. I love these markets. Even when I was sick with COVID, I was in the bed studying these markets and stuff. Wasn't trading, but, had my positions that I was looking at. Anyways, all right. So McDonald's, this is another one of my shorts. This one is looking really, really good. We got our trend starting to form here, okay? If we look at our channel, this is a pretty good, if it comes back to the bottom of this channel here, that's going to be really good. That's where I'm expecting it to be, but who knows? I have no idea where it's going to go. All I know is how much am I going to risk on my trades. That's it. That's all I know. I want to risk a small amount, and I want the risk reward to be in my favor. So McDonald's is looking good. I'm already up 2% on that, and we'll continue to watch. All right, this is another one. Freeport McMoran. And yep, this one's good. I already went through McDonald's. All right, so Met scaling. This is one that I'm scaling in. I've been scaling in Met for a while. Okay, well, not a while, but been scaling into this one. Okay, beautiful trend. Okay, a lot of strength on this one. So I'm actually gonna take another. I'm gonna scale in some more on this one. My stochastics is really, really high. Okay, so this one, I mean, who knows? But let me see here. About 91 cents is what I'll be. Yeah. Oh yeah. This is a good risk to reward. So I'm gonna go ahead and pick up another lot. One of my lots. And the lot is usually 100 shares, but pick up another. All right, so
wish we had that luxury, and if we were back in September, we would have that luxury to debate what is better. But as the video just said, and I've been on tape since August, is saying we are behind the curve.
Let me see here.
In August of last year, and
All right, let me see. All right, so yeah, I'm gonna go ahead and buy some more of Met right here and add to my position, scale in a little bit more. Let's go into the next one, 3M. What are we doing with 3M? This is oh well, this is my put. All right, so there we go with Met. All right, so I'm pretty loaded on Met. This one is moving pretty good. Let me put my stop though, just in case if this one goes, and then I am bowing out, okay, and taking my gains with me. All right, so what do we have? All right, so yeah, let me set this because it is pretty close to what could be stopped out. All right, so now let me cancel that. All right, so that one is set. All right, guys, so I have 7 minutes to scan the market. It's going to be a quick scan, but let's see what we got. I don't want to ignore you guys, okay? So you know, I'm gonna be going through the chat in a second, guys. I just want to go through these really quickly and see if anything is looking pretty good. Microsoft, what's up with Microsoft? It's already it looks like it's gonna break that 200. It's about 3%. All right, so I'm gonna go ahead and take a trade in Microsoft. Okay, so just shorted Microsoft. I'll go back and set the stops once the market is closed, so I can have enough time. What's up with okay, I'm already in that one. What do we have here with Honeywell? Okay, this one's looking pretty good as well. Let me see, about 2.5, maybe 3% on this one. Oh, this is. I don't really care for the. Man, there's a lot of stuff going though, so you know, I'm gonna have to, because this market is like just getting so wobbly. It's still not that bad. All right, so let me start a position in Honeywell. Procter Gamble. Been looking at Procter Gamble. This one would be going long. Yeah, this one looks like it could be a good position long. You know, very, very, very extremely tight stop. Catching this one right at the bottom of the range. All right, so picking up some Procter & Gamble. Okay, and you know what? A lot of these guys, I don't trade Johnson & Johnson, but that looks like it could be a good trade. Goldman Sachs, that one's already okay. Ooh, Nike is moving again. This thing is unbelievable. All right, so you have about $5. The risk is too crazy on here. All right, so Nike could have been a good trade, but you know, it's just the volatility. It's not, there's not a good risk to reward ratio on that one. So you see that you know, this really long candle, it could flip very easily, and then, you know, you can give it all back. So the range here I'm talking about is $5.10 or so. Its normal range is $3.81. So you see in the last just today, the range is just it's way overstretched past its regular trading range. So I don't like taking those types of I don't want to risk more than what it usually trades. Salesforce. This looks pretty good. Let me see what this one is here. Oh yeah, see, this is another one. Today, the range on this one, you're trading at about $12. The normal range on Salesforce is $9.62. So it's just really overstretched right now. I like to take, I like it when they're much smaller than their range and they're kind of breaking through. Home Depot. All right, so 850. Okay. The range the range is $9. So this one's pretty good. This one is pretty good. So let me go ahead and throw this one out. Any earnings coming up on the 22nd? Okay, so yeah. And let's continue on. Walmart is like breaking. Walmart is another one. Just throwing that one out. Home Depot and Walmart, those two. Cisco is and there's a market. I almost got through the list, guys. Actually, I got to the last one, Cisco. I don't trade after hours. So that pretty much, once the bell rings, I'm done. After hours, it's it's too wacky. But just looking at Cisco, this one would have been it would have not been a bad trade. So maybe on Monday I'll come in here and take a trade on Cisco. Okay, timing is everything in trading. Timing is everything. So if you miss it, if you miss an entry that you like, I don't necessarily like to, just like, oh well, it's in a price range that I was looking at. I like to get it right when it's hitting. Okay, so for me, timing has always been everything, and not to be late to the party. So I don't know what we'll do with Cisco, but maybe on Monday this might be a potential trade. So added a couple positions today. Everything looking pretty good. Look at as I say, wow, my 3M is amazing, but that's my option. My option's up 14%. So I'll be watching the options. Again, that's just kind of an experiment that's weighing out. Let me see here my trades. So I got sold out of my MetLife. Okay, so that was a really good position, guys. If you saw it on the stream when I first started, if you're just signing in now, you're just kind of coming into my channel. When I'm done with this, you're going to be able to rewind it because I archive. It's going to be archived, right? But you can see in the beginning of the stream, I had quite a bit of MetLife shares, and that pretty much got stopped out. And so, oh well, MetLife is still there. Sorry, what am I doing? I thought it got stopped out on that one. So never mind, MetLife is there. Good. Okay, I was like, wow, that thing moved quick. All right, so MetLife is percentage wise, it's McDonald's that pretty much is a leader. Okay, and that's the most important thing, guys. Okay, it's not necessarily the dollar amount. The dollar amount is going to be whatever your portfolio is, but really it's the percentages, because the percentages, if me and you are trading, but we have different portfolio sizes, the thing that we are going to have is going to be the same percentages. So that's what I like to look at here. Okay, the dollar amount is that's going to fluctuate every but the percentages, McDonald's is pretty much the leader. That's almost like 3%, which is pretty good. followed by Freeport at 2.5. Then with MetLife has been fantastic though, because I've been scaling into MetLife. I have like 7,000 shares on MetLife. So that's, that one I started off with like 1,000. I think, I don't know. Let me see here what I start off with MetLife. Yeah, about 2,000 shares, give or take 1,700 shares on MetLife. That's what I started off with. So this one has been, I've been as it keeps moving, I keep adding into my position. Why? Well, look at the chart, guys. It's trending. All right. So the trend, I always say the trend is your friend. As it goes higher, I'm going to continue to increase my position. Of course, you follow up with, you move your stops so that once it does come back down, you're not getting the whole ride back down. Okay. Instead, you get stopped out, and then you can buy some more shares and rinse and repeat and start back up again. So you're playing channels, you're playing trends, and you're playing channels. That being said, everything is looking pretty good. The only positions that aren't looking so good is my American Electric Power. All right, that's down about 1%, and Procter Gamble, which that's like brand. I just got that one, like at the close. So this one is it down, but again, this literally just got put into the put into action at the final hour. So this is a fresh position on Procter Gamble. But nonetheless, look, the most important thing to look at here, guys, is your winners versus losers. My losing position is 0.83%, not even 1%. My largest winner is 2.5%. Okay. So that's what I always want to look at. Okay. I never want, for one, if you've been coming into my channel, and again, I have not been streaming for a while. Okay. I haven't been streaming, I don't know, for like what, over a month, maybe 2 months. But if you were a regular and you're coming into my channel, you're going to find something. You're not really going to see a lot of losers in my books. When you come in, what's red, it's only going to be red for a little bit before I just leave it, get out of it, get out of the trade. I don't like to stay red in my positions. All right. If they're red, I'm already kind of looking at them, put my stop, and that's it. If they hit the stop, out. Okay. I'm out. And I'll get back in somewhere else. Maybe not. Maybe it just kind of, flounders around for a little bit, and I won't get back into that stock for another, I don't know, 6 months. Maybe 6 months, it'll look like a good price, and I'll get back in then. But the thing is that I don't let my losers stick around. Okay. I only give them so much time, and I only give them so much of an amount. That's all I can control. I cannot control how high the stock goes or how low it goes. If I'm short, I can't control that. What I can control is how much I'm going to risk. And I always, whenever I get into a trade, normally I want to calculate what is my risk on this trade. If it goes south, if it goes against me, how much am I going to lose? And that's what if I don't know that, I really don't get into the trade, unless I was doing what I was doing previously when I was streaming, which I started getting into the day trading aspect. And that's another thing I want to say, guys. I am not a day trader, okay? But being in front of the screen, I was streaming every single day, and I got sucked into day trading, okay? I've been trading for over 15 years. I was trading, professionally for over 15 years. You would figure that after 15 years, you would know when to break a bad habit. Well, it was so easy to fall back into the bad habit of trading, of over trading, of day trading. I've never been a day trader. I mean, when I first started, but I've never been a day trader. I've always been a swing trader. I've always been a position trader, usually holding for anywhere from 1 to 3 months. Okay, that's how I've always done it. Unless I get stopped out or whatever. But, that's usually the window. The window is 1 to 3 months. But when I was streaming every day, I was looking at my swing trades, and they're just kind of, the swing trades are like, maybe it's a once a day trade. Okay. You're not moving in and out like a day trader. And I got sucked into day trading, started looking at my positions, started convincing myself, oh, maybe I should buy this here. And I started day trading my swing trades. I remember when I said that. I remember when I said, I'm going to day trade my swing trades, and this was something new to me, something that I really you know, I again, I'm not a day trader, and I got caught up with that, and I lost money doing that. Okay, the market, if you don't have a plan, the market will take your money, and that's exactly what it did with me. Okay, I was trading when I should have not been trading, and not really having a plan. Just, you know, day trading is a very, very hard game. Most people who day trade, they go bust. Okay, they don't last very long, unless they're very, very good. Okay, it's extremely hard to day trade and to make it a living. I think maybe like 1% of the people who day trade are able to make it a living. The most of the people though who day trade, they end up going bust because it's very, very hard. They either go bust or they give up or whatever because it's just very, very hard. So that's why I stepped out of that. And, you know, it was hard for me to day trade. I don't, you know, I need to stick to what I know. I've always been a swing trader. And also, too, the gains are much better for me when I'm swing trading, okay? Because I'm taking less trades, but I'm trying to capture larger amounts, larger chunks of profit, all right? Instead of walking away with, what, I don't know, 0.4%, I'm getting actually 4%. So the chunks of profit are much bigger in swings. The other thing about swings is that you can trade casually. You don't have to be at the, you know, looking at the market every single minute, which for me doesn't work with my lifestyle. Because when I was doing that, I was taking time away from my daughter, and Eleanor was suffering from this. And that's the other reason why, again, I went on hiatus. Had to figure this out. So I love streaming, but you know, how was I going to stream? And anyways, I'm going off on something else here. My point is that I was doing something that I normally don't do. And what did the market do? Humbled me. Okay. I thought, you know, I can day trade. I know how to swing trade. I can day trade it. You know, I can get back into it. Not the case. So shout out to you if you're day trading and you're making money consistently and you've been doing this for a while, because it's very hard to do. And if you haven't been doing that, shout out to you for trying. It's very, very hard. So I hope you do well. But for me, the market took me out. It was, you know, it was not working with my whole system. So I went back to what I know and how I've normally traded, which is swing trades, 1 to 3 months, position trading, building positions, and trading like how I traded when I was in the financial markets professionally as a trader. All right, guys. So, all right. So that being said, let me go into the chat. Let's open up the chat. Let's do some reviews, and then we'll call it a day. But it's good being back. So let me see here. Where's my window? There's my window. Okay, and let me refresh the. Okay, I can't. What happened to my stream? I mean, my chat. Can't see my chat. Guys, give me a second. Let me open up the chat here. There goes my mic.
The meats. It's all about the like al pastor.
All right. I need to tighten up my mic, guys. Things getting. All right. Let me see here. Let me go into my channel. King Jab, what's up, man? What's up, King? That's weird. Like when I clicked out of the screen, all of my my whole chat disappeared in my Streamlabs. Still figuring out all this stuff, man. But okay, let me see here. Let's move this down into the correct window. And then we'll do some reviews. We'll look at some charts together, guys. All right, here we go. There we go. King Jab. Wow, man. Guys, okay. So look, I just opened up the chat and man, this like there's a lot of conversation going on. Let me scroll up to Sheeny. Sheeny was talking about with scaling though. I want to see what he said and talk a little bit about that. Learn about decay time. Okay, so that about options. Yeah, for sure. So options, I'll be experimenting with options, and whenever I have questions, Sheeny, I will be asking you. You said when scaled, losses can be bad. However, when entering an option, you understand like 6.4 would be maximum. Oh, okay, got you. Okay, so this is scaling into options will be second for me. Okay, the first thing I want to do is just, see what my entries and exits are. And if that's good, then I can take it into, okay, how can I scale into this? Hopefully the mic also is not ticking, annoying. Stock, what's up, Stock? Good seeing you, man. Hopefully you're still in the room. SPY about to close under the 200-day moving average. Yes. SPY's been having a hard time. Fubar says, so the sell-off propaganda goes off on the market news. Now the whales are getting in on a good price. There's some good prices there, but yeah, there's a lot of things that are wobbly. Okay. Shinigami stopped, I think. Yeah. Kimberly Clark, that one did stop. I got stopped out on Kimberly Clark. And King Jab coming into the room. Been trading full time since November. Shout out to King Jab, guys. Also, if you're new in the room and you don't know who Jab is, you got to know who Jab is. All right. Jab is a very cool, crazy guy. He likes to eat spicy things and stream his challenges live. But follow him. He's a pretty cool guy. And he's always jamming out in the room. So if you like to listen to music and watch the market, King Jab is your guy. Follow him. Good dude. Good guy. Stock market. Yeah, buddy. I'm still in here. Glad to see you. Good to see that I'm out of. Yes, man. I know. It's good to be back. It's good to be back. Good to be trading and opening up the stream and hanging out with the community. Let's turn on this list so we can start doing some scans and looking at some charts together. So that's not what I'm looking at. Warp World is what I'm looking at. And once it opens up, what's this? All right. Okay, so this is open. Let's try this right here. There we go, guys. The queue is open. So here's what you're going to do. All right. If you want to share a chart or you just want to pull up something or get my opinion on whatever, just hit the exclamation point followed by the symbol. And actually, I'm sorry. It's had to sneeze, guys. You're going to hit exclamation point chart just like that, followed by the symbol. So exclamation chart space symbol, and then you'll go up on the queue. So Sheeny is first in line with TIP. TIP. All right. So let's check it out. And if you want to see what the current one is, I need to figure out how to change it where it says on the bottom, it says current stock review via Shinigami. I need to fix that because it's supposed to show the symbol, but it's not showing it. So if you want to know what symbol it is, just hit exclamation current and it'll show you the chart. All right, so let's look at it. Let's look at TIP. By the way, guys, do you notice something different about the channel since my last stream? There should be something very big. If you're observant, you should notice that I made a big change to the channel. And let's see if you guys can catch it while I pull this up. Yes, Shinny got it. Painted the wall, man. I painted it black, dude. It was black. My wife was like, man, are you sure you want to do that? I'm like, yeah, I'll be fine. Then once I painted it, I'm like, wow, it is really dark. But then I turn on the camera and beautiful. I love the way it looks. You guys know, if you've been watching the channel, I used to have a studio and create digital media content. Used to work with modeling agencies and whatnot. So I was always using, lighting in my photography. I knew that the black would be a winner. And but when I first painted the wall, man, it was dark. It's like a cave. But I like it. It's so much nicer. The lighting looks great. So very happy with this improvement to the channel. All right, so let's check it out. Tips. This is a bond fund. Tips is I mean, look, getting sold off big time. So you had a little bit of a bounce today. Today was a pretty good bounce, but it's still very, very close to the lows. Very close to the lows. So I mean, bearish on this one. All right, I wouldn't be going long. I understand the logic. Okay. Oh, I could be getting it right at the bottom. Let's go ahead and switch back into the channel chart so you guys can see what I'm talking about. All right. So you see here, look at that downtrend. Okay. It's just, all right. For me, I don't want to trade against the crowd. All right. I'm like, that's the thing. If I'm going to do counter trend trading, then I want to catch it here at the outer edge of the channel and basically ride it up to the median and then get out right there. Okay. But I'm not going to really stick around in the trade. I'm just, when I'm counter trend trading, it's just very, very quick. And you're really just, you're not scaling. You're not scaling. Okay. You're just, again, getting that outer edge of the channel, riding it back to the median and then getting out. So you're, getting a really quick profit. That's the only way I can see trading tip right now. All right. Because if you see here, that's what we are. Okay. You're pretty much right at the end of that channel. Okay. So if you were to buy it here, it's good buying at the edge. Okay. And then ride it up to the median and then figure out what you're going to do. That's how I would play it if I was going long, but I would not go long because, again, I just don't like this trend. This is just a massive trend. Okay. So if I'm going to go long in it, I wanted to get back, touch the median, and then get back into this upper quadrant of the channel. And then I'm going to be thinking, in the upper quadrant right here on the upper channel, what I call the upper chamber, you have the upper chamber and the lower chamber. Okay. The upper chamber is when you're going to be thinking bullish. That's when I'm looking. Okay. Look, you're thinking about something bullishly for the most part. All right. This is not like nothing is set in stone in trading. All right. It's more of an art than a science. Okay. But for the most part, I'm looking bullishly when it's in the upper chamber, and when it's in the lower chamber, I'm looking, I'm looking to take the stock short. Okay. So bearishly. So right now, generally, this is just, I mean, I don't think it's going to stop here. Okay. You did have a bounce, I've stopped looking at candlesticks so much, by the way, guys. I know I have them up here, but I've been slowly taking them out of my setup. Because they've been a little distracting to me. I'm always really looking at price. Okay, so I know some people are looking at the doji, and there's like the dark cloud cover and all these. There's probably, I don't even know how many, maybe like 50 or more different candlestick formations, and you could memorize all of them. But for me, I'm trading more on price, okay, than candlestick formations. So So as a matter of fact, let's just do that here, okay? Or no, I don't want to do that on this one because these are Heikin Ashi charts. And I like Heikin Ashi just because it can give me a quick overview on the trend. It's not jumping around. It allows you to see the trend much easier because it's calculating the candlesticks differently. And so for me, it's a good way just to glance and see, okay, what is my trend and where am I at on the channel? So again, if I was going to buy tip, which I would not be buying it, but if I was going to buy it, I would make sure to have a very tight stop. Okay. I would, once it breaks this low, I would be out of it. Okay, so right there, you're probably looking at about a 1% risk. That's not bad. Okay, but what are you looking to gain? Well, the gain on this one, if it goes up to the medium, that's about a 1% gain. So it's like a 1-to-1. It's not worth it for me, so I wouldn't do it. I would be looking more at shorting this one and waiting for it to break the lows, and then jumping in with a short and possibly scaling. Okay, but I've already, like I wouldn't even really look at doing that with tip because I've already missed the train. Okay, this is when I should have started if I was trading it. You remember what I said, timing is everything. All right, if I don't get it at that right time, I really don't want it. Okay, timing is everything. It's always been, getting in at the right time when everything is hitting. That's how I trade. Okay, so for me, this more or less would have been the time to start going shorts. Probably would have ran up against me here, maybe would have got stopped out, probably would have added some shorts here, carried down to the low, and then started scaling. And I would probably still be scaling here. If it pops up big, then I would get out of my overall position, and that would have been the end of the trade. I would have rode this whole thing down. That's how I would have played it. So looking at tip, again, I'm still bearish on this one. I see this one going lower. It could turn and go higher. Who knows? But I would not be playing this. I wouldn't be playing this for a long. So I'm going to give this one a rating. Let me see here. I'm going to give this one a rating of bearish. And that's how I look at tip. And let's get back to the chat room. Make sure I have any questions. Or I have any questions. I've answered any questions. Oh, did I really, Sheeny? I need to change that then. I didn't know I did that. Try to add another one to the queue. Let's see if it comes up. Jab says Jab is looking at Tesla. All right, so we got Jab up next with Tesla. I made out like a bandit on puts on this. Yeah, I bet, Sheeny. I bet you probably did fantastic with puts on tip. Good play, man. Congratulations. I would still, and if you're still looking short, I don't think it's ready to turn around yet. Maybe if you get like a real big bump, but it could be, okay? It could be. Today was a really big day for this one, so we'll see. But shout out to you, man. That's awesome. You took the color off your candles? Yeah, that's the thing, man. I've been just trading with the lines, the open high. Was it the OHLC bars? Open high, low close. It's just easier. It's the candles were distracting me. They were getting a little distracting. You've got 30 puts. Oh my gosh! Wow, man. Congrats on that. Nice solid play on that one. All right, so Sheeny just added golds. All right, so let's get into Jab's stock, Tesla, which we all know and love, Tesla. All right, so where are we at with Tesla? This thing is I'm bearish on Tesla. The first thing that I do, guys, is I want to know the direction of the stock. Okay, so I'm going to switch over to the daily trend so we all can just glance at the trend really quickly. Okay, where are we at? Downtrend. Okay, you kind of maybe got you could maybe say, oh well, it's technically it's sideways. Well, yeah, it is kind of going sideways. Okay, but for the most part, it's in a downtrend. It downtrended straight into the lower chamber. Okay, and the lower chamber is, again, that's where I'm bearish. So it's in the lower chamber. So for me, this is a bearish looking stock, bearish looking charts. I would be looking at Tesla Now, if you see here, we broke the 50, bounced off the 200. We're stuck between the 50 and the 200 right now. Okay. So, you know, is it going to break the 200? Who knows? Who knows? It could. You know, is it going to break above the 50? Who knows on that as well. Like I always say, it's all about timing. So just kind of rewinding the clock on this one right here. Okay, this was a big day. Okay, right here is when this would have been a good time for me. I would have been looking at short right here. Okay, right here, and that's pretty much on. Let me zoom in so you guys can see. Let's move that. Okay, so right here you're looking at 829.33. Okay, this is when I probably would have shorted. Okay, and I would have got stopped out. Okay, would I have shorted this one then though? Let me see here. What is the range? The range on Tesla back then was $65.85, whereas the range for that day was $106. So I would have not taken that trade. I would have not shorted it. Okay, because the range is 60. Okay, think about this. Okay, guys, the range of the stock. Okay, for the last 14 days. Back on what is this? Back on the 27th. Okay, back on the 27th, the range was $65.85. Okay, but the range for that day, buying it, you know, or shorting it, and you're looking at a range of 106. Okay, so the range for the day was larger than it is normally for the last 14 days. So whenever stocks do that, there's a lot of volatility, and I don't get into that. Why? Because there's more risk. Okay, there's more risk, and for me, I'm always trying to minimize my risk. I want to take the smallest risk possible, and that's what I want to go with. Okay, so that's for me. You know, if I can risk 0.5%, I'd rather risk that than risking 5%. So, but nonetheless, this is when I would have been looking at short, okay, because it was falling very good. Let's see what it did from that point on. Just kind of following along with it. Let me see here. I'm going to put something up real quick here so we can see here. Okay, so right here. All right, so I would have got stopped out if I would have went short. And what has it done since then? It hasn't done really much, so it's just trading in a range. So I would just be on the sidelines right now. Okay, it's, you know, it's wiggling around until it breaks the 200. Until it makes a nice significant move to the downside or a significant move to the upside, I'm not going to do anything. So I would, again, I'm looking at this bearish. I would not be looking to go long. If it moves to the upside, I still wouldn't be looking to go long. So for this one, I'm a bear. And I would just be waiting for it to break to the downside. The minute it breaks, I would consider maybe going short. That's how I would trade it. Okay, we all trade it differently. I'm not telling you to short it or anything like that. You got to do your own homework and whatnot. But the way I would play this one is, I would wait for it to get to the lows. If it trends sideways for a few more weeks and maybe starts getting up, maybe at that time that, you know, it could be building a base, and then maybe it's ready to go long again, and you could get a great price on Tesla. Who knows? I don't know. But looking at this right now where it stands, I would be waiting for this one to make some significant movement to the downside, and then I would start a short. So this one gets rated with this one gets the bearish label, and there we go. So Jab, my friend, I hope that helps, man. I hope I've given you another perspective, and again, man, I'm not some kind of guru. I'm not some oracle. Okay. So, if you're long in this one, don't be like, oh my gosh, I'm going to sell and get out. Don't, you got to do your own due diligence. I'm just telling you how I see it, how I would be trading it, and I would be looking at this one for sure right now as a potential short. I would just be waiting, okay, because it could flounder around for another, maybe, another week, maybe a few weeks, and just trade in a range. So hope that helps, man. Okay, so you got this one short, right, Jab? You're on this one short. I think so. I think it can get there. We just, right now it's basically just kind of waiting, and let's see what the stock does. If you're in short, that's great. If you're wrong, remember, man, one of the things I always preach, and it's not my own wisdom here. Okay, but this is the wisdom of the greats. I'm talking about Mark Minervini, one of the greatest traders in the world. I'm talking about Paul Jones. I'm talking about I mean almost I'm having a blank on the names. Let me see here. O'Neill. Okay, O'Neill's another one. Okay, thing is this: if you're wrong, nothing wrong with being wrong. Just be wrong quick. Be wrong short. Don't stay wrong. So if Tesla starts moving against you, make sure you have a stop. Go through the chart. Look at what point you're basically going to bail out. Okay, because the problem is that one of the hardest things it's for people to do, okay, is to admit they're wrong. It's not just in trading, okay? Especially if any of you guys are married, okay? It's very hard to admit that you're wrong. Tell your wife, you know what, I was wrong. Or your child, if you have kids, it's hard to say, I was wrong. That's something that almost all human beings struggle with, okay? It's hard for us to admit when we were wrong, but it's especially hard in the markets, okay, to admit when we were wrong. A lot of times what happens is when we're wrong, we refuse to kind of accept it. And what you'll have is people doing dollar cost averaging. And this is this is preached in the financial industry like there's no tomorrow, okay? If the stock goes down, you call up your client and you're like, hey, the stock is down 10%. We should buy some more. And here's a famous line. If you loved it at 900, you're going to love it at 800. Here's the thing, though. The stock is clearly telling you made the wrong choice, okay? The market has told you. It's spoken to you. The market has told you are wrong. So at that point, what do? We refute. We fight the market. We fight the market. We say, you know what? I know better than this freaking market. I am not wrong. I'm going to double up my shares because I'm right. And this is usually what leads to the financial death of traders. Because eventually that mentality is going to get you into a position where you're going to double up and the stock's going to keep hemorrhaging and going down, and then you're done. Then you're like, oh my gosh, I'm down 50%. And that means you have to make 100% just to come back to break even. You're done. It's very, very hard. And all it takes is that one stock to get away, that one position that doesn't come back, and it's over. So be very, very careful with that. And I'm not preaching to you, Jab. I'm just in general telling the room, as a community, when we're wrong, guys, there's nothing wrong in admitting you're wrong. Okay. Just don't stay wrong. Don't let a 5% loss turn into a 20% loss. Okay. Don't do that to yourself. Take the 5% loss. And then if you still want to get into it, at least you get into it, but you don't continue to let the position drag you further and further down. There was a stock that I traded today, Kimberly Clark, KMB. All right. So I got stopped out of this one. And, but I still like it. So if I'm like, damn, you know what? I got stopped out, but I really like it. I can get back in. Okay. If I wanted to. But at least I'm not staying wrong. At least I could, have another opportunity to know, okay, all right, so maybe I'll short it again right here. And if it hits my stop, then I'm out, I'm out again. But the thing is just, you don't want to stay wrong. And again, if you come to my channel, you're going to see that there's really not a lot of red on my screen. Okay. Cause once it's red, that means it's approaching my stop. Once it hits a stop, that means it's out of the book. Okay. That means, all right, let's make the next trade. But I don't stay wrong. I'm not like, oh, well, this is a really good company. This is, there's no way that, Microsoft's going to come back. It's Microsoft. It's not about the company. It's not about what they make. It's not about their stature. It's about if you were wrong in the trade or not. You're wrong, you're wrong. Okay. So for me, that's why I always say, if you guys were watching me earlier when I was going through some of my last trades, I was just calculating very quickly, what is my risk? Okay. Where am I going to get out? If I don't know that, I'm not making the trade, because I got to know where I'm going to get out if the position goes against me. Because you know what? I'll tell you this too. 50-60% of the time, my positions are going to go against me. I'm only right maybe 30 or 40% of the time. I'm not right that much. But it's not how many times you're right, okay? It's when you're right, what is the size of your winners? So you want your winners to be quite large, because then you don't if your winners are like 5 to 10 times the size of your losers, you really only need to be right like 3 times out of 10. You don't need to be, even your win to your risk reward ratio is greatly in your favor. So the most important thing is that I always look at that. What am I going to risk on this trade? You have to know that. If you don't know what you're risking, in my opinion, you should not put that trade on. If you don't, and write that down somewhere, guys. If you don't know what you're risking, you shouldn't be taking the trade. Okay, that's how you could end up with a 20% loss. So, but again, this is just me, my opinion. Okay, we all trade how we trade. And it's not actually just my opinion, guys. I would actually say, no, this is the opinion of the greats. And again, if you read Market Wizards, you're gonna find this all along the best traders in the world. They agree. It's not about how many times you're right. It's about what are the size of your winners versus your losers. Because then you could be wrong. I mean, damn, you can have a bad quarter and still finish out the year pretty damn good. So anyways, I'm babbling on here. So let's go off with Sheeny's next stock here. Stock says, it was fun watching the carnage today. Kept telling you guys, my buying power is going up. Some got it. Let your winners run, lose fast. Absolutely. And that's what you were saying. I was in Stock's room. That guys, Stock Market Plan. Follow him. This is another good guy. We actually were in the same bit. We both were in the financial industry, and we worked in the same company, different divisions. It's a small world. But I came on Twitch, and lo and behold, it's like, we found out that we were actually working with the same company. So Stock is he has experience. He is a breakout player. Okay, so he comes out in the evenings. I think on Wednesdays, right? Stock, not sure. Anyways, follow this guy. Really good guy. He's part of the Twitch community, and we were talking about this yesterday, about how O'Neill, and if you picked up the book, how to make money in stocks. I have the one up here, how to make money selling short stocks. That's that is the golden rule. Okay, the golden rule is that you want to make sure that you don't stay wrong for a very long time. Okay, if you're wrong, let it be quick and get out. Okay, live to trade another day. So follow Stock, and you'll be seeing me in his room on Wednesdays in the evenings. We always have fun. No problem, Stock. No problem, man. Good seeing you. So let's look at gold. Let's see what we have with gold. That's Sheeny's position. Sheeny is looking at this one. I'm not sure if you're in this one, Sheeny, or not, but let's pull it up. Guys, is the CNBC too loud? Let me know if it's pretty much matching my voice, or if it's a pretty good. I like having some background noise. Don't always want to put music on, but I like having the talking heads. So let me know if it's too loud. Okay, so let me clear this out because I have some annotations here I want to get rid of. And guys, I'm gonna take a quick break after this, then I'll come back. So gold had a really nice breakout today. Really good day on gold. I like this one, Sheeny. Like this one long. If we take a quick glance, we can see here that, and again, this is why I like the Hike and Ashies and my channels. I can see very quickly, you know, what's going on and align myself to trade accordingly. So with gold, you got a nice little uptrend that's forming. Okay, it's hitting the top of the channel, but it's in the upper chamber of the channel. So again, bullish mode. Broke up through that 200-day moving average. That's great. All right, so it broke up through the 200-day. Nice volume. Okay, so this was a significant move. That's what you call the breakout move. Okay, broke out. I mean, the whole day it was just like moving up. Let me see here. All right, so the daily range on this is 57 cents. Today, you're looking at a range of about $1.43, almost 3 times the range. So I wouldn't be taking the trade. It's just a little too much that I want to risk. I'd be risking about 7% on this one. Okay, I don't want to risk that much. Anything over 5 is borderline pushing it. 3 is good. 2.5. That's you know, pretty much where I'm drawing. Anything above 2.5, that's where I'm kind of like, I don't want to risk more than 2.5% on that trade. This one, I'd be looking at, if I was to trade it, put a stop, I'm looking at about 7% risk on this one. So I like the movement. I'm bullish on it, but I wouldn't buy into the movement. I probably would wait until I can get, and I may not get filled, okay, because with volume like this, it's probably just, it could continue shooting off and moving up nicely. Sometimes I'm going to miss a move. It's okay. I'm not going to catch every move. But the moves that I do get into, I just want to make sure that the risk reward is you know, it's not it's in my favor, and it's not too stretched out. And again, definitely not at 7%, which is pretty high for me. But if you were to take the trade and say, you know what, look, I'm willing to risk 7% on this one, you could, you know, then this would be this would have been an ideal time to maybe go in on this one. But I like it. Look, I like it, man. Okay, I like it. I'm bullish on this one. If anything, I don't see it coming back down. It could, but if I can get it, I don't know. No, I don't. Then it would be. So look, let me just sum it up like this, okay? I'm bullish on this one, and I like it. Would I have bought it? No, I wouldn't have bought it. Okay, it doesn't match my criteria for going long. But if you did, no problem. Anyone who's bought this, I definitely can see why. Okay, we all have our criteria on what makes a trade and how much risk we're willing to take. For me, this one's a little too much, but I do like it. So this one gets the bullish label, the bullish sticker. And yeah, this one looks pretty good with inflation and all of that. This one looks like it's gonna, you know, just be a pretty good winner. So I see this one moving higher. We haven't even peaked out on the stochastics. You got a nice MACD. So yeah, bullish, man. I am bullish on this one. Let me go back to the chat room. So Sheeny said, I got a light. You got a light put position from the high of the day, debating flipping. See, yeah, I see what you're doing. You're doing a counter trend trade on this one. All right, you're trading against the. Well, let's look it up. Let me pull up that. Let's pull up the daily trend. Okay, so I see what you're doing. You're basically putting a put up here and kind of let it float back down into the median of the channel. I see that. Okay, and that's one way you could do it. I wouldn't do it though. Okay, I think it was a pretty significant move to the upside. Now this is a Heiken Ashi. Okay, so that's not like a typical candlestick, which people can say there was a strong rejection. Well, this is Heiken Ashi. Okay, it's not your typical candle, so you can't really read it like that. If we were to switch to candles, there's our candle. And that's a strong candle, man. Okay, so usually when they do this, it may come down a little bit, but this thing looks like it's getting ready to go and test up over here. Okay, 2120. It looks like it's basically getting, it's trending higher. So as I always say, be careful when you're fighting the trend. All right, don't stay fighting the trend. It's much easier to trade when you're going with the trend, because the momentum it's like a sailboat. Okay, you don't even need an engine. The wind is just the wind powers you, and that's how it is with trading. When you get in and the trend is going down and you're short, it's just carrying it for you. Okay, you're not really fighting against it. So if you're counter trend trading right here at the edge of the channels, yeah, you could play it like that. Just be aware that it could continue to roll to move against you. And like I always say, if you're gonna take that chance, so if you're shorting it up here and putting a put up here, nothing wrong with that, okay? But if it moves higher, get out of the way. All right, listen to the market. Don't fight the market. The stock is clearly telling you what it's doing, and that is more important than the charts. The charts are very important, okay? But what's more important than that is what the stock and what the market is telling you. There's a lot of people who come out and they're like, oh, the market's going to come down and we have inflation. We're going to see some lows. That's good, right? That's all, and let me lower this. This is, that's all fine and dandy. And it very well may do that. But what's more important than that is what is the market doing? I always have my ideas on, look, this is where I see the market going. This is what I'm looking at it. But when it comes to a trade, I'll very quickly lose my opinion. Okay, if I'm wrong, I will lose my opinion, because I'd rather lose my opinion than lose my money. So I'd rather take a small loss than a big loss. So if you're going to take that trade and buy that put, that's great. That's great. Okay, but if it goes against, again, don't fight the trend. Don't fight the market. Okay, listen to what it tells you and trade accordingly. So if you do have that put, that's cool. If it comes down a little bit, you'll make some money on it. But generally, I see this one kind of to the upside. I see a lot of and look at the MACD. Okay, so the MACD, I never really mentioned the MACD, but I put it on here because going forward, I want to these are my most important indicators, the MACD and the stochastics. But more important than that is the price. Okay, so you have a MACD that's moving up, that's great. Okay, you don't want to really, always want to trade in that direction. Again, if you're counter trend trading, you could do that, but you got to be quick. Okay, so then you know that you're fighting the trend. So again, like I said, I'm bullish on this one, man. So I think I beat this one down pretty good. Let's go to the let's rate this one, and then we'll go to the next one. Okay, I already rated this one. All right, so next we got homeschool. Homeschool, yeah, that's cool. Homeschool. Let me go to the chat so I can connect with you guys. All right, so yeah, Fubar says, I would say trading stocks that isn't ranging, and strategy is trend trading. You don't average down, only up, pyramiding right, scaling. Mm-hmm. You can trade mean reversions with standard deviation and average down, scale in with certain risk, but the asset has to have ranging character. Yep, I would agree with you, man. Stocks says everything is tradable, but we have to manage the risk. 100%, man. That's why you could actually have two very good traders, who will take opposite positions on the stock, on the same stock, and both be profitable. One guy's short, one guy is long, they both end up profitable. Why? Manage the risk. They manage their risk very well. Okay, so that's very important. Yeah, I'm at the point now I can get out, flip, and ride. So I like the entry. My stop is really tight with light risk. Cool. Good deal, man. Flipping is good. Flipping, you know, when it goes and it takes out the stop and you want to reverse it, you can, you know, not bad to do that. All right, stock. Take care, man. If I don't see you, you have a good weekend, man. And make it a good one. And I'll see you on Wednesday or whenever you stream next if I don't see you. Because I'm going to stream probably, I want to stream, like I said, I haven't nailed it down, guys. Sunday, Monday, or Tuesday. All right. Probably Monday or Tuesday, one of those 2 days. But I'm going to be streaming twice, okay? One in the beginning of the market week, and then on Friday at the close of the week. So I open up the market with you guys, and then I close out the market with you guys. I think that's a pretty good way of trading, and that works with my schedule for streaming. I'm trading every day, but for streaming at least, that works with my schedule pretty good. The Monday or Tuesday evening will be an evening stream as well, so that will be a more casual, relaxed stream. And I'll be doing scans and, you know, scanning the entire market. Well, not the entire market, but probably, you know, the Dow and the S&P 500. So going through at least 500 stocks, which sounds like a lot, but I can blow through that pretty quickly. So that will be on Monday, Tuesday. And then on Friday, I'll be trading live with you guys, just like how I did today, you know. So stock, take care, man. Fubar, you're too nice trying to look at all angles. I like to just have your input, like if you were looking at it yourself. Clear thoughts. I'm interested in it here at this level. I do this, etc., etc. Straight to the point. Okay. All right. Which one? Which one are we talking about, Fubar? Which are we talking about? Gold? Let me know which one we're talking about, Fubar, and then I'll give you my take on it. Straight to the point. Actually, you know what, guys? Give me 5 minutes, okay? I'm gonna grab a little bit of water, grab a little snack. I'll be right back. 5 minutes, and we'll continue on. Continue charting the market jungle, and continue having fun. Let me see here. All right, guys. So yeah, give me 5 minutes. I'll be right back, and then we'll continue on into the chart. All right, guys. I am back. All right, there's my audio. So let me get back to it. And let's see what Fubar said. Chart Noor, chart CVX. Since it's for me, I want to know how you are thinking and how you look at it. Okay. For example, this gold isn't tradable now. I would be interested here or here. Right. Got you. I guess I've been giving more, kind of angles on it to, let me see here. Why have I been doing that? I'm trying to, in this channel, affect how people think. One of the goals that I have for my community, one of the things that I want to give to my community is how to think. And I know a lot of people who are in the channel have different backgrounds, but for the beginner, one of the bad habits that we do as beginners, that I did as a beginner, was trying to find a certain way in a certain system, a certain trader, and basically trading exactly like that, like copying what they're doing. And there's nothing wrong with that. However, there's always going to be changes in the market. So if you don't understand how the system really works, it's not really going to be of a great benefit to you. It's better learning and asking and looking at different angles. That's why whenever I pull up a position, I usually try to kind of attack it from all different angles. That's actually that's how I do it. Granted, I could do it and where I just say what I think and how I trade it. And some people may hop on board and shadow copy me and, trade the stock. And, I don't care if you do that. Like, I know like Sparrow's against that. Sparrow doesn't want people just copying. I don't care. Like, if you want to copy my trade, that's fine. I'm not here to do that. But we're all grown adults. And at least I hope we are. But, we're all to that point where we can do our own due diligence. But if you want to skip your due diligence and just basically, some of you come in here and it's like, oh, I'm gonna buy what he's buying and do it right here. You can do that, but that's not a long-term recipe for success. I don't mind doing that. I don't mind telling you guys. I mean, that you guys see my positions, for crying out loud. I don't mind showing you what I'm in. Okay, I'm not here to pump it or hype it, but I am here to show you what I'm doing. All right, to show you what I'm trading and just, again, kind of like be where you can, look over my shoulder and see, what it is that I'm doing. So I see what you're saying, Fubar, for sure. So maybe I should do that. Maybe I should just get straight to the, this is how I would trade it and just kind of cut it from there. So let's try it. Let's try it. Let's see how it works. I may fall back into that bad habit of, trying to look at it from different angles for, the people who are just learning how to trade, but let's try it. Hell, why not? All right. So, Lugdor, what's up, man? You may have been chosen as my new lurk. Personally, I could never hear the CEC. Oh, okay. So you can hear the CNBC. So that's when I was gone. I'm just scrolling up on the chat, guys, in the Twitch channel. So if you're watching me on YouTube, try to hop over on Twitch. Let me see if I can actually see. I may be forgetting about all my YouTube crowd, and maybe I have a little crowd brewing over there. I don't know. Let me see. No, I don't have anything there just yet. I just started streaming on YouTube. I've been streaming on Twitch since I started the channel, but recently I started on YouTube where I'm doing dual streams. And so I have to be certain to monitor both chats so I don't forget about, the guys or the girls just coming in on YouTube. Disputed, what's up, man? How you doing? Good to see you. Welcome. It's Friday, dude, and I actually I'm actually trading and streaming and live streaming, doing what I said I would do, which is I would be streaming on Fridays. I didn't quite make my promise on earlier this week, but I'm getting there. If you can see, I painted the wall, man. So I didn't want to be in here with the smell of the paint and whatnot. Just so had to skip out on that day. Anyways, okay, so what are we looking at? By the way, guys, if you just joined the channel and you have a stock you want me to look at or review or share or whatever, all you're gonna do is you're gonna type exclamation chart space followed by the symbol, and then it'll come up on the queue and we'll pull it up all here and we'll look at it. So that being said, finally getting to hopefully you're still in the room, homeschool. I don't know if you're still in the room, but guys, the current stock that we're charting is actually BTU for homeschool. So homeschool, if you are in the room, great. If you're not in the room, I'm still gonna chart it. Why not? See if it looks. Maybe it might look good for all of us. Okay. So I hope you're still in the room, man. But if you're not, it's okay. We're still gonna pull it up on the chart, and let me see what looks here. What looks good here. So I'm gonna go with just telling you my approach. Let's try that instead of looking at all angles. All right. So got a nice little uptrend going on this thing. Got some breakouts going on this thing. I would be scaling. I'd be in this thing long. When is your okay? Cool. Yeah, your earnings is not until May, so you're good to go. You don't have to. I don't like whenever earnings is coming up. I say this all the time on my channel, especially if you guys are just for the new people just coming in. I try to get out of my position during earnings. I try not to hold. If I really am convinced, I'll hold with a small amount, but I want to get out. I want to do all of my work before earnings, because earnings, you could be running like this on a nice little trend, and then earnings could even be positive and the stock opens down 20% and you gave up all your gains that you've been building for, weeks if you're a swing trader like me. So I'd rather not do that. So for me, the earnings on this thing is again not till May. So I would be playing this. I'd be building up a long position on this one. I'd be scaling in. I'd be adding to my position. I would have added here. Let me see here. Okay, so right here. Let me see here, because just because it breaks out doesn't mean I'm going to go with it. Okay, I still want to see, what is the range. That's a huge I would have not taken that trade. Okay, because I would have been risking if it comes down, if it fails. Okay, if it fails from this point on here, it comes back down, I'm looking at down 15%. That's way too much for me. 2.5% is where I feel comfortable. 15%, I'll skip to the next one. Okay, I don't need that volatility, and I don't want my money to be in a stock that's so volatile. So I do want movement, but I don't want crazy kind of movement like this. Or I could, get in with a few shares, where I'm taking a smaller position. But I'd rather just skip. But okay, so let me see here. BTU. So my range last 14 days 94 cents, but on this specific day here 242. So that's yeah, that's a little too much for me. So I like it bullish. What do we have? The yeah, I wouldn't take the trade here because it's just too high. Okay, it's a nice breakout, but if it's a false breakout, or if it comes back or whatever, it just gets weak and it comes back down, that's just, again, I'd be down like 15%. Okay, so I'm bullish on it, but I wouldn't buy it. So this one gets the bullish signal. Let me go back to the room. Guys have any questions over that? Fubar says, But you want to cut. Oh, let me scroll back up. You don't want to bash people's charts. But you want to copy up to the viewer. But remember that you probably have more market experience than I. Yeah. Yeah. See, that's why. I mean, look, I don't care if people copy. I learned by copying. Like, seriously. When I was trading professionally, you would just shout out your trades. You would just shout them out. Okay. Some offices don't do that. They're not comfortable. It depends on the kind of environment. But in one of the offices that I was trading with, this dude was the head trader, amazing trader. Okay. This guy was just a beast of a trader, both him and his partner. And they would just shout out the trades. They would just shout out whatever they were buying. They would load up. They'd like pick 10,000 shares, and it was just crazy. And I would follow along. If they're buying, I'm buying. Okay. I don't, because they had a track record. They were really good. But I still had to learn how it was they were doing. And so that being said, it's, you could do that, but unless you're like, following for the whole thing, it's you don't know when they're going to get out. So like I can say I'm buying something, all these positions here, somebody could say, oh, I'm going to buy Microsoft, I'm going to short Microsoft, but Monday morning I could, that could hit my stop and I'm done, I'm out of it. And if you don't know that, if you don't know when I put my stop or whatever, you could continue to stay in it and get hurt. So if I end up down like 2% on Microsoft, but the thing keeps moving against me, it can go bad. So that's why I say, I don't, we're all grown-ups. I don't like telling people what to do. That's just also not my philosophy, guys. You're grown men. As long as you're not hurting somebody, you're hurting your neighbor, whatever, you do what you want to do, guys. Live and let live. That's how I am, people want to live a certain way. They want to do a certain, I have no problem, I don't like telling people what to do. We all decide what we want to do. We all take our risk, and as long as we're not hurting each other. But that's why I say if so I don't mind if you're copying some of these, but just know where you would get out at. Okay. Cause I know where I'm going to get out at. Okay. But again, I don't mind doing that. I mean, we all have our own style of channel. That's how I do it. Homeschool is still here. All right, cool deal, man. So yeah, again, homeschool. I like this one, man. I like BTU. I would be bullish on it. Again, I just went and bought the breakout because it's just too much risk for me. Okay. But I like it bullish. So let's go to the next one. Make sure I didn't skip over any questions. Yeah, BTU Energy. Yep. Yeah, it's energy's been on a killing. It's been moving. It's been one of the movers for sure. All right. So next one that we have here is Sheeny asking about Newer. Okay, Newer, guys. So let's pull that up on the chart. Okay, so let's see here. All right, so basically we are kind of moving sideways on this thing. Let me zoom out for a better view. Where is this? Okay, so we got some we got a downtrend going on this thing. Let's see here. Let me open up this room, guys. If you have any questions while I'm charting Newer or whatever, let me know, and I'll be certain to try to answer those. This was a massive break right here. I mean, huge. It just gapped down, moving lower. So, look, I wouldn't be buying this thing. Okay, so Newer, how would I be trading Newer? What happened? Was this earnings or something? Yeah, earnings. Again, guys, great example why I don't trade earnings. Let's say I was long in this and then it opens up right here. I would have been down 20%. and I couldn't do a damn thing about it. So, you know, that's why I get out for earnings. Okay. But granted, now that earnings is over, you can, you know, that's when I would get back into it if I was going to trade it in. So, let me see here. We're newer. Okay. We're out of earnings. I would be trading this thing, possibly maybe counter trend trading. That's how I would do it. I would try to buy it at around $78. Okay, $78. Would have put a stop on the lows. 75.30 would have broke that low. What would I have given up? That would have been 3.5%. Okay, so this one I would have been stopped out of that one today. Okay. All right. So here's how I would play newer if I was going to play it. I'm going to let it, let it continue to do its thing. Okay. It's going to continue to run pretty strong. The minute it pauses and it does something, okay. See this? That's what I'm waiting for on newer. Okay. So let it kind of continue to run down. The minute it gives me a block like this, possibly, okay, I'm not saying I would, but possibly I would be looking at it to try to go long here. I would get out at the low of the day of that candle and really try to take a small loss. Okay, so if it continues to move against me, I'm only going to be down like maybe anywhere from 1 to 3 to 5%. Okay, so I'm not risking more than 5%. And I would be trying to catch the bottom on this one. Okay, so if I can catch it at the bottom here and it doesn't break that low and it moves back up to the moving average. I mean, look at, I don't know if you guys can see on my screen here. Okay, but that's 27% to the 20-day moving average. So if you balance out the risk and the reward, you can get in. You're risking about, let's just say 5%. Okay, let's say you get in and and you risk no more than 5%. If this thing comes back to the moving average, you've made your 5% and then some. You're at 8%. If this thing breaks the highs of that gap down and touches that where it gapped down, you're looking at 15% at that point. So first stop 8%, second stop 15%, and if it travels up to the 20-day moving average, you're looking at 27%. Okay, so yeah, man, I would be looking at this one to try to get in on a pause like this, risking no more than 5%. Okay, and you could probably trade it with an option, I guess, if you want to or whatever. I don't trade options. I'm starting to experiment a little bit, but by no means am I an option trader. Okay, so I trade usually just the shares, but that's what I would be looking at on this one. So whoever got in here, the minute it broke that low, you're out. Don't stay in the, don't buy it and then expect for it to bounce, but let this thing come down on you like 5-10%. Don't do that, because this thing could drag you down. You could be down 30% on this. So just make sure that when you get in, you know where you're getting out. I would risk no more than 5% on this. So that's how I would trade this one. And is this in the S&P 500? It's not. This one's not in the S&P, so I wouldn't. I don't trade. I stick to only the S&P 500. It's not even in the Nasdaq 100. Yeah, so I just I need liquidity, guys. I absolutely need the liquidity, and I mean, not to say that it doesn't have liquidity. I mean, it traded 2 million shares, so but I stick to the S&P. The Dow 30 is what I trade, in the S&P 100. Those are my main, and every now and then also maybe the S&P 500, but I don't trade anything other than I try not to. I did it before in the past, and this year I'm not doing it. Okay, so hope that helps. Let's give this one the rating. Let's give this one its rating of bearish. So Sheeny, hope that helps, man. I hope they, if you're thinking about trading this one, maybe what I said is what you're thinking. So good luck on that. Yeah, sure. There was the earnings. So Fubar says, so what do you want to see if you're going to be in this one? Well, like I said, if I'm going to take a position in newer, I need to have a pause. Okay, so I want to see a day that it's green, and I would like to see a higher low than the previous day. Okay, doesn't always have to be, but I would like to see that. I'd like to see a higher low than the previous day, and you know, an up day. And then at that point, I would, you know, then I would think about it. I would think about going in, and you know, because at that point, maybe that's, you know, it's gonna bounce, and that could be a good way to counter trend trade the stock. All right, so we got Sheeny asking about CVX. Stock says, for a long-term swing, I would wait for it to close over the 200-day simple moving average with double the average volume. Good call. I like it too, stock. I like it too. The thing is this, the only thing I don't like about that is, let's go back to it. Let's go back to it. All right, so let's go back to it, and all right, so guys, here we are with newer, and if it does I'm gonna move this. One second, guys. I'm gonna move this. Because it's easier to see on this monitor. All right. So stock market says okay, for a longer term swing, I would wait for it to close over the 200-day simple moving average, which right here it's this line right here, guys. Okay, that white line is our 200-day moving average. Stock says he would wait for it to close over that with double the average volume. Okay, so here's our volume. Okay, that definitely is a smart way to trade it. Okay. The only thing that I don't like about that is and this is just me. So stock, I'm not trying to step on your toes, man. You know I love you, bro. I respect how you're trading. But the way I trade it, okay, the way I look at it, guys, I want to get as close as I can to that outer channel. Okay, if I'm going to counter trend trade it. Okay, so if I'm going to trade it and go against this trend here, I want to get it as close as I can to my outer channel. Okay, because if you see here, when they touch this outer channel, they quickly get back to the medium. The stocks like to ride in the medium, okay? And they don't really stay at these outer edges for very long. This is where I want to be. Okay, this is kind of where I'm waiting for. I'm waiting out here at these outer channels, okay, to either trade it long or short or whatever. So if I'm counter trend trading, I want to be here, okay? I don't really want to be here because it's already kind of made a movement, okay? I want to catch it here because, again, I'm not planning on being in this thing long. Okay, if it was trending to the upside, then you know, I don't mind building a position and pyramiding, adding to it. But if it's if I'm going against the trend, then I know that I have a very short window. So I'm really trying to just get a little quick piece of the pie. All right. So I want to be, again, I want to be right as close as I can to the outer edges that I can get. Okay. So if it did actually do that, if it actually came back to that 200-day moving average, you're looking at 83.43. So you're actually looking at about right here, 83.43. Let's just say right here. Okay. This is where you're looking at. So you're really off of that. It's already made at that point, it would have made a 11% correction. It would have already moved 11%. I don't like counter trend trading. Okay. I don't, but I'll every now and then I'll do it. Sometimes it looks really good. Newer is a case where if it was in the S&P 500, I would be probably doing a counter trend trade on this one. But the way I trade it is this: if I'm getting as close as I can to that outer edge, I have a very, very tight stop. Okay. So going back to right here, the minute it gives me something like this right over here, look, it can go down. Okay. It's not done going down. But at that point, it's like, okay, look, I'm willing to take a trade on this. And if I'm wrong, I'm willing to be wrong 1%. I'm willing to be wrong 2%. I don't mind that, because if I actually ride that channel all the way, even if it goes halfway to the medium, again, that's 14%. So you kind of have to, for me, it's always a balance of that risk to reward. If I'm risking 2% for 10%, I'll take that trade every damn day, every day. I mean, I'm exaggerating, but for the most part, if the criteria matches up, I will take that trade every day. Okay. And if I'm wrong the majority of the time, I don't mind, because I only need to be right one time and I took 10% out of the stock. So, that's a good trade for me. That's why for me, trading with newer, I would try to catch it here. Now, every trader is different. So, I wouldn't say the safer bet, because really what it comes down to is your risk to reward. And any trade that gives you less risk for a larger reward, that's going to be the safe bet. Okay. So it's not necessarily price levels as much as it is that risk to reward, for me at least. Okay. This is how I trade. So that's how I would be doing it. If it does move up to that and close above that 200-day moving average, that's going to be pretty good. Okay. That's going to be a good, and maybe more people start buying it there. But like I said, I'm trying to really catch it at the edge. Okay. But that's also why I have a tight stop loss. I'm not going to place a buy in I'm not going to place a buy in this and go long if I do not know where I'm going to get out. Okay. Write that down, guys. Put that into your memory. That question. Know when you're going to get out of the stock before you place that trade. If you don't know when you're going to get out, when you place that trade, something is very, very wrong, and you're basically opening yourself up to large losses. You're basically telling yourself, look, I don't know what I'll be down, but I'm willing to accept the unknown. Well, I'm not willing to accept the unknown. Okay, I'm willing to accept 1%. I'm willing to accept 2%. Heck, maybe 5%. Okay, I'm willing to accept that, but I'm not willing to accept not knowing what my loss is. That's just not a wise way of trading. So always know, if you can, you should get in the habit of knowing when you're going to get out of that stock, and also know if you're going to be adding, when you're going to add to the stock. But for the most part, most people just kind of, they enter the trade and they exit. That's fine. But you should really know when you're going to get out. So that's how I look at this one. And again, stock, not stepping on your toes, brother. Like I said, I respect the way you trade. I know how you trade. You have a solid way of trading. This is just how I trade it. Stock also says the fundamentals are bad. That's the other reason why I try to stick with the S&P 500 and trade just what's in the S&P 500, because those are the top 500 companies in the world, at least in the in the States. So I can't really go wrong with them. But if I don't know, if there's some like unknown company like penny stocks, I don't trade penny stocks. Who knows what's going to happen? Who knows if those companies will be around? Who knows what liquidity is like? So, by being in the S&P 500, you basically narrow down my trades. Okay, it's kind of like this. Let's say you're going to start a basketball team, all right, and you're looking for players. Are you going to go and look in the neighborhoods? 1 second, guys. All right, guys. So I'm gonna pause for a second. Yeah, 1 second, guys. So, guys, I had to pause for a second because Eleanor just created her third circuit. We just got this. Oh, there's your fourth one. So she wanted to share it with me and with the chat. That's cool. So we've been doing some circuits today in homeschool. We've been having fun with that. So love you, baby. All right. Had to share that with the chat, guys. Very important to praise your children. Very, very important. Sing their praises. It's very good for their confidence and has pays dividends. So anyways, guys, back to stocks. What I was saying is I only trade what's in the Dow 30, the S&P 100, and every now and then venture into the S&P 500 if a company's in the S&P. The reason I do that is if you're going to start a basketball team, where are you going to start looking for your players? Are you going to go down to the local park and start looking at players? Are you going to go down to maybe, if there's, I don't know, some kind of city competition, and you're going to try to find some really good players there? Or are you going to say, you know what, I'm not going to look at the lower level. I'm going straight into the major leagues and just look at, the professional basketball players. I'm just going to pick from there. So the more you narrow it, the more you get the cream of the crop. Okay. And a lot of the penny stocks would be kind of like trading like local companies or, local guys or girls, whatever. You're building your basketball team with people who haven't necessarily shown that they are giants. All right. So that's why I go straight with the S&P 500, because I know that, these are, again, the top 500 companies in the United States, probably in the world. All right. These are good companies. They've already, the S&P has already done pretty much the sorting out for me. And it's pretty much, it brings me a plate of stocks that I know are strong, good companies. They might have, crappy fundamentals, but for the most part, these are stocks and companies that have proven their worth. So if I'm going to trade, that's the kind of quality that I want to trade. I don't want to trade some like penny stock because I have no idea, for one, it hasn't proven its worth. So it's just more risk for me. Going with the S&P 500, again, they're basically bringing me the best companies, top 500 companies in the States. So if you can't make money with the top 500 companies in the States, then I don't know. Sparrow does very good with trading the pennies and more stocks that are outside of those, which is why I love her channel, what she does. But for me, there's just too much risk. I can't get into a stock where I could have huge slippage or, I don't know, from one day to the next, it could be like up 20% or 30 or 40%. But likewise, it could be down that maybe. So for me, the security is in the well-established companies. That's why I go with that. JJR says circuits. Kids are going to be so smart when they get it. Oh man, tell me about it. My daughter is starting to look at charts, man, making trades too. So I can imagine where she's going to be when she's my age. That's an incredible thought. Yeah, these Cypher, it's one of those circuit kits. Really, really fun. I like that touch. Yeah, Jay, it's really nice. Just touching it. But you know what? It's I don't know. Sheena was saying that it's kind of buzzing, or it's giving some kind of a buzzing sound. So, oh, we got a first time chat. Very nice. Happy B-Day, Scratch in SC. What's up, Scratch? Stock market plan, future algo programmer. Who knows, man? Maybe. Japan and Cuba. I mean, yeah, competition. From this Cuban, not basketball, boxing, baseball. Now you're talking, yeah, there you go. But you guys see my point, right? That's why trading what's in the S&P for me, they've done the homework of pretty much kind of bringing me a good amount of stocks that I know they've, they're pretty high caliber. Okay, they're not really going anywhere. JJ says, anybody know which company is getting added to the S&P 500? I don't know. I'm not sure, Jay. That's a good question. If you guys know, type it in chat. Because I don't know which one is getting added. But when it gets added, I want to look at that company. That's the other thing too, guys. I mean, if you're investing and if you're taking like long positions in these things, I always tell my family members, look, go with winners. Go with companies that you know are going to be around, okay? Google, Microsoft. I mean, Google's expensive, super expensive, but, Microsoft, Apple. Go with the stocks that you know these companies are going to be around for a long, long time. But if you're trading like, Ted's Barbecue, restaurants, and it's trading at, 49 cents, you don't really want to put your financial security in these, so yeah, they're explosive and whatnot. But for me, I can't afford that kind of volatility. But that's just me, guys. That's how I trade. Not trying to convince you guys to trade any. We all trade how we trade. Oh, Scratch. Did I get rated from? I was just kind of like jibber jabbering and didn't even see that I got a raid. So shout out to Scratch for that raid. I wish it showed me on here. I wish it showed me when I got a raid. Does it say here? First time chat from Houston. Shout out to Houston for that first time chat. Oh, Jay, you rated me. Thanks so much, man. I appreciate that, Jay. Yeah. I appreciate that, brother. Guys, follow Jay. Jay's a really cool guy. He's on during the day. I always pop into his chat and his channel. I usually I think for the most part, I'll pop in at least 2 or 3 times a week towards the final hour, because I'm not streaming every day. Only, like I said, I'm only going to be streaming twice a week. But during the day, I'll pop in because I'll still go online. I'll pop in and go into Jay's room and check up on Jay, see how he's doing, chat it up, and just hang out with him while we trade. So, guys, if you're not following Jay, follow him. He's a very cool guy, and you'll appreciate him. So we got a stock market plan is one to follow, and Jay, we got a real good community here. So I'm gonna have to set it up like Disputed has, where it comes up and it automatically shows a link. So Jay, stock, I'll be doing that in the future, man, so I can actually put up the link here, and people could go in and follow. All right, so let's see. What are we doing? Let's get to Sheenie's. I left Sheenie. Sorry about that, Sheenie. I just go off on a tangent or talking about this and this and that, and then like 30 minutes later, it's like, oh yeah, let's get back to the stock reviews. I think I'm gonna stick around to when Sparrow starts up her channel, and then I'm gonna do a raid over to her channel. She has a great channel. You guys all know, we all know Sparrow. But if you don't, we'll raid over to her channel. She's looking at a lot of the stuff that I don't trade, the penny stocks, you know. But she's very good. She's just a cool person all around. She has her own method, and it's just a fun channel. You can learn a lot from going into the channel. So we'll raid her when she comes on. I think she's going to be coming on shortly. I don't know. But let's go ahead and do some scanning and jump into CVX. So current to CVX. And what do we got here? This thing is a high flyer. This thing has been doing well. All right, so right away off the bat, guys, I'll tell you, if I was in this one, I'd be in this long. And I would have got in right here. This would have been a nice time to buy, which is the 27th. This would have been a nice time to buy it. I would be in this one long at again on the 27th. I mean, it's always easy to say, oh, I would have bought it here, right? So, but really, like I say, timing is everything. So what I'm doing is I'm looking at the whole chart and I'm seeing, you know, okay, where would I've kind of gotten in at? But I really like this movement right here. Okay, look at the volume. Really good volume. We already have a nice strong MACD. I don't like, you know, going against the MACD. So if the MACD is moving up, that means people are buying it. Okay, that means if it's trading above the 50-day moving average, which is that gold line right here, that means the institutions are holding this stock, and it has support from the top mutual funds and you know, a lot of the pensions and whatnot. That means they're buying it. Okay, it's not like 100% rule, but it's a good guide. Okay, if it's above the 50, that means it generally has institutional support. Okay, because there are rules on what institutions can buy, and one of the rules is that, you know, if it's under the 50, they don't touch it. Okay, and if it breaks under the 50, they start liquidating. Okay, because it could fall lower. So the 50-day moving average is a good institutional guide. All right, so, and it broke above that back in December on the 21st. So this would have been you know, this is when it was kind of signaling that it's ready to move up, and it continued. All right, it could have came back down, but it started right here. Okay, and then you got the MACD that kicked in right about on the 29th. So first it broke above the 50, then the MACD kicks in. Okay, and it just rides along that 20-day moving average really, really good. See, it has not closed under that 20-day moving average since December 22nd. So this is beautiful long movement. Okay, so I want to trade with that trend. Okay, I want to be, if it's trending up, I want to be buying. I don't want to be selling. I want to be buying. Like I said, I like this movement here because you got some good volume. This is really good volume. You got the stochastics is really overextended. Okay, but a lot of times when they're trending strong like this, and you got stochastics that are just maxing out, that means usually a lot of times they'll just kind of continue to run. So I would have got in here, put a stop right underneath a low. I mean, you know, even right there, that's about 2%, 2.5%. Okay, so risk 2.5% to maybe have this thing continue to go. Who knows where maybe it'll continue to move up. But 2.5% risk, that's not bad, you know, for potential of, again, we don't know how high the stocks can go. We might have targets, you know, especially if we're using Fibonacci, but for the most part, you know, the market is going to go where it wants to go. It's going to do what it wants to do. And a lot of people That's my advice. Okay. Listen to the market. If it's going up, let it go up until it's done. Okay. So you can continue to raise your stops, which I recommend. Don't just set it and forget it. Continue to move your stops up. So if it hits that high and finally it's ready to kind of, move back down and get back to the median of the channel, at least you don't give away your profits. Okay. At least you take that. And then you can, maybe if you really like the stock, then you can get back in at the median. So, yeah, I'm bullish on this one. And the price, you have earnings on April. So this is still good. Bullish, Sheeny. I would have a 2.5%, 3% stop if I was long on this one. And I'd have no problem buying the stock here. Again, just setting like I said, at least a 2.5%. This one probably give it a 3% stop if I was buying basically at this price. So that one gets the bullish. You're long on CVX. Cool. There you go, man. All right, let's get to the next one. And like I said, I need to figure out how I can set it on the actual stream so you guys can see on the bottom what the current stock is. I don't know why it's not doing that, because it should be doing that. Maybe you could help me with that, Sheeny. I have no idea why this isn't showing it. I'll figure it out, but I'm not going to do that right now. Right now we're going to be charting. So if you guys want to know which one it is, just hit exclamation charts and it'll tell you what we're currently looking at. So what the next stock we're looking at is MDLZ. What is this? Mondelez International. And this one is in the S&P 500. This one looks pretty good. Let's follow the movement. I like that. See this? This is great. This is beautiful. Okay. You had it came down, touched the 50-day moving average, and shot back up. The volume, pretty good volume. Stochastics turning up. This is when you had a catalyst, I guess you can say. Okay, there was a catalyst right here. This was an important movement in the stock right here. I would have bought it here. Okay, if I was playing it, this is how I would play it. I'm gonna try to do what Fubar said. Just say what would I do? I would have bought it right here. Well, let me make sure. Let me see what the range was. You're looking at about 5%, $2.82. Normal. Oh yeah. See, I wouldn't have got it. The normal range is $1.47, and right here you're looking at $2.87. So almost $1 more. Pretty significant movements. I would try to get it maybe at 65.75. Okay, I would have put a buy order at 65.75. I would have got triggered on this day. Put my stop right at the low. Right here. So I'm looking at about a 3% risk. And that's where I would have pretty much went long on the stock. And let's continue to follow it from that time. Okay. And yeah, so I would still be long this. I would still be long on this stock here. And again, my stop would be right here. Okay. Right underneath the low. So that's 63.90. So it'd be like 63.88 2 cents lower, 2 or 3 cents lower. 2 cents is a good rule though. But that's just my own. Ask me why, I don't know. Habit. That's just how I do it. But I would have put the stop here. So I would have been in this long, and if I was in this long, we would have been about 2% on it. Okay, not bad. But again, we're still risking like 2.5%. But again, I don't have a target. I'm gonna stay long as the stock is telling me it's a good position. It's moving up. Now it did pause. If we switch over to our trend, we had a little bit of a downtrend, touched the went into the lower chambers, then it quickly got back into the upper chamber of the channel. This is where I'm looking bullish, and now it's pretty much moving nicely here. Okay, so that's that one. That one's long. Yep, so that one's that. Fubar, I guess you're heading out. It's a night chat. All right, Fubar, you take care, man. You take care. Good seeing you. Thank you for coming back into the room. It's always nice having you. Guys, let's see what our next chart is. We are charting for Chickabow Wow is asking for CHPT charge points. Okay, so this one has been selling off. Look at that. Under the 50, sell off. MACD negative. You do have a positive MACD. You're getting some movement to the upside on the stochastics, but the price level is still pretty bearish. I would be shorting this thing. Let me see here. What is this? This is about $1 of a range on that day. Yeah. Is charge point is not in the S&P 500. Wow, I thought it was. It's in the it's also not in the Nasdaq 100. The Nasdaq 100, not the 500, the Nasdaq. So yeah, if it's not in the S&P 500, I wouldn't trade it. If it was, I would probably consider putting a trade for Monday. Again, I like timing, but if I can get it, if I can short it right there, you see this candle, right? If I could short it right here, I wouldn't mind. That's basically like right at that 20-day moving average. But the close is 1392. So if it pops back up to 1392, if it was in the S&P 500, I would have strongly probably went short on this one. It is $13. I don't really like trading stocks that are, under 15. But yeah, that's how I play it. So this one is bearish. Chickabow Wow, right? This one's bearish, man. For me, I would be looking at playing this one short. And again, if I was playing it short, 1392 right here, it would be where I would have shorted it. Okay. And where would I get out? Well, if it breaks that high, I'll get out. Okay. So I'm only gonna risk. Well, that still is a pretty good risk, right? That's like 7%. So scratch what I said. I wouldn't even trade it. If I risk more than 5%, it's very hard for me to pull the trigger on that. Okay. And this one would be risking like 6% or 7%. So I wouldn't trade it. But if you don't mind risking 7%, that might have been that would be a trade that I would take if I didn't mind making 7%. I can't say, go take this trade because I'm not here to give financial advice or anything. I'm not here to tell you guys what to do or pump or anything like that. I want to tell you how I would trade it. Okay. So I wouldn't take it, because if it goes against me, I'm going to lose 7% or more. Sometimes it could go a little over that. But generally, 7% on this, that's too much for me. So that one is a no-go. Chickabow, I hope that helps, man. And hopefully you're in this one short. If you're not, well, just be careful. Like how I always say, man. I always say. But I do think it is going to move lower. Now, if it breaks out, though, okay, if it does take out this high and it holds above the 20-day moving average, okay, this purple line here, that's going to be a very good sign. If you are long the stock, and if it does that, those are going to be two really good factors that are going to be going in your favor. One, it broke the high of the of this candle here, and it broke above the 20-day moving average, and it held the 20-day moving average. Going to be good signs, okay? Because at that point, it could be trying to get back to that 50-day, which is 15% away. So those can be two good things if you are long. Let me zoom out a little bit. I'm so zoomed in on the chart. All right, so Jay is asking for, we got the current stock being charted BBG. What is this? Oh, that's BBGI. I don't see BBG. Did I get a wrong one here, Jay? You playing jokes on me, Jay? All right, so Jay was just pulling my leg on this one. So, Jay, you're getting banned, bro. No, I'm just playing. But let's remove this one. Be big? Oh, is that what he meant? Be big? All right. I wouldn't play it, but let's chart it. I mean, Jay, you didn't ask for it, but let's just chart it just for fun, right? Let's for fun see what we have on this one. I don't play these types of positions. See how they just kind of do that? Okay. These are unpredictable. Unless you're like Sparrow. Then you're predicting these, but that's out of my that's a different trading style, so I don't trade this way. But it does look like, it's just looking at it, looks like it's starting to move up. This was a nice movement right here for me, but it quickly broke under that. Let me zoom in so you guys can see what I'm talking about. Okay, this was a good candle. This also was an interesting candle here. See, like, that's the thing, guys. All right, so to buy this stock, like how I normally trade, I would be looking at risking 12% because it's only $3. 12% that's a lot. That's a lot that's too much for me to risk. That's too much. Way too much risk. So even if I liked it, I couldn't trade it because of how much of a percentage these things run. Which is why they're attractive in a way to beginners, because you can actually like buy these stocks. But the thing that most people don't realize is that, number one, if you're a beginner trader, you're entering one of the hardest things to make a living at, which is trading the market. It's very, very hard to trade the market. Now, if you're a beginner and you're entering the market, and at the same time you're also taking like a massive amount of risk, not only is it going to be hard, it's like getting in the ring and basically saying, look, I know I'm a beginner boxer, but I'm ready to go up against Holyfield. Okay, I'm ready to go up against a guy like Tyson in his prime. I'm ready for it. Even though I just started, I know that I'm just learning, but I think I'm ready to take on these guys. It's very, very hard. And that's what you're doing, because you're taking on you're taking on stocks that have a massive amount of risk. So when you're just learning how to trade, all right, it's hard, but it's going to be much harder if you have stocks that are, when you're wrong, they're taking much more of your capital. Now, a lot of people say, well, look, it's $3. I can't go out and buy, I can't go out and day trade like McDonald's, which is, $260. I can't afford that, right? But you got to set, in my opinion, okay, the first thing you need to do before looking at how much money you're going to make, you need to make sure that you don't lose that much money, because a lot of people have this, I have no idea where it comes from, but a lot of people have this notion that once they get into the market, they're going to make money. It doesn't actually enter their thought that, you know what, I'm going to lose money. It's automatic, like, okay, cool, this is how much I'm going to make. I'm going to be making. They don't factor in losses. You actually have to reverse that model. You have to get into the market and start looking at, okay, I know I'm getting into something new, so I'm probably going to lose. It's just like I said with boxing. You don't get into the ring and start thinking, okay, great, I'm gonna do a knockout. I'm gonna take this guy first round. I'm gonna knock him out. And then after I'm done with him, I'm gonna move over to that guy and that guy. And then once I'm done with this gym, I'm going across town and I'm gonna take out those guys too. And at this rate, I should be knocking out about 2 guys every week. You wouldn't think like that in boxing. You wouldn't think like that in any sport. Okay, if you're just starting off, you know that you are going to screw up. You're going to make a lot of goofs, all right? And you're going to get hit. So you're going to expect to go down. You're going to expect to get hit in the face. You're going to expect to maybe lose a few teeth or maybe even have a crooked nose. These are things that you're going to expect, and your coach is telling you, hey, you know what? You go up against this guy. He's really good. Keep your guard up because he likes to hit straight in the face. You have a coach guiding you. But in the market, it's hard because you don't have that. And instead, we have this notion that, okay, great, I'm going to start off trading, but I'm only going to be able to make money if I'm trading these little penny stocks because I can't afford the other ones. What you should focus on is trading the other ones. You may only be able to buy 1 share, right? And a lot of people are like, well, I'm going to make $1. I can't make $1 with that. But listen to yourself. Okay, listen to yourself. First, make money. First, learn how to make money. Don't look at how much you're making. Just make money. Then once you make money, revise a plan. Okay. Then you can say, okay, cool. Now that I'm making money, now I could do this. But a lot of people start planning before they've even made money. And they're, doing this and this and that, and they're paying no attention to risk. And that's what makes this game hard. Because number one, it's hard to begin with. It's not unconquerable. It is not. It's actually, it is easy. But psychologically, it's hard. And the biggest thing in the market, I'm going to tell you the biggest enemy. It's not the hedge funds. It's not the whales. It's not the bulls if you're a bear. And it's not the bear if you're a bull. The biggest opponent in this market, the biggest enemy is yourself. Straight up and down. You are your biggest enemy in the market. Because we have... First of all, a lot of us don't have coaches. So we enter learning with our mistakes. Our mistakes should be the ones to teach us. But because we have an ego, it's very hard for us to face up to our mistakes. And again, I had people say that, oh, I can't afford to trade McDonald's. That's too much money. Well, are you consistent yet? Well, kinda, or yeah, maybe, or whatever. But it's like, listen, first, this is not something that you jump in and immediately you're going to make money. You have to treat this like any other business. If you start a business, if you start a restaurant, I always say, if you start a restaurant, you're going to lose money for the first 6 months, maybe for the first 2 years. You expect that. So in the market, you should do the same thing. You should know, okay, I'm going to get into this market. I may or may not have a mentor or a coach, but I'm going to expect to lose money. Okay, because I've never really done it. I'm just learning how to trade, or maybe I'm not consistent yet. Okay, I'm not consistent. So if I'm not consistent, if I'm just starting, I want to go with the least risk possible, so that this way, when I do have stocks that go against me, I'm not losing 20% of my money. I'm losing 2%. I'm losing 5%. And how do you do that? By managing your risk. So I tell beginners all the time, you should be trading, what's in the S&P. You should be trading that. People ask me, friends who ask me, oh, well, what about this penny stock? I can buy like 5,000 shares. Don't trade that. Okay. Trade 5 shares first. Trade 5 shares first of, I don't know, FedEx or, Apple, Microsoft, whatever, Home Depot. Trade first with those. And again, people are like, well, I can't make money in that. Well, when you first enter this market, if you want to make a living in the market, you can't focus on how much money you're going to make. Because the first things first is not losing money. Second thing is getting consistent. Third thing is making money. But a lot of people have it backwards. Oh, I'm going to make money. Then I don't know, I might be consistent, and then it's like risk. So those 3 things are very hard to do. But again, I'm going up on a tangent here. And guys, it's all love. It really is. I started this channel because one, I want to help people to get to that level where they can be consistently profitable in the market. I've done it for 15 years professionally. I was a professional trader in the markets. For you guys who know, I traded with one of the largest banks in the world. So I want to share that knowledge with you guys. I want to share that way of trading with you, because to have that kind of insight would have been a beautiful thing when I first started trading. So that's what I want to hand over to my community. Okay. So that's why I say, guys, don't be ashamed with buying 2 or 3 shares of, some $200-$300 stock. Okay. Don't be ashamed. In a way, use it as a test. Like, look, you know what? Damn, if I'm wrong, I'm only going to lose $5. That's great. That's great. Focus first on being consistent. There is no race. There is no race. When you're, and I'll say it again, guys. When you start learning how to trade, you have to treat this as a business. And you have to take a businessman's risk. So people starting off a business don't take great big risk. You don't open up a restaurant and say, you know what, I'm gonna get this huge space, and I'm gonna hire the best chef in town. I'm gonna pay him a damn good salary, and I'm gonna get 20 people, staff. I'm gonna deck them out. They're gonna be in bow ties. They're gonna be coming out looking sharp. I'm gonna hire the best people. I'm gonna pay them top dollar. You wouldn't do that. That's bad risk. You would say, I'm going to start off small. I'm going to work. I'm not going to hire anybody until I'm making some profit. And I'm going to make sure that, the ingredients that I'm getting, I'm not buying so much. Because if they go bad, I've lost that capital. So you treat when you start trading, you have to understand this is a business as well. This is 100% a business. The only thing is that you're buying and selling companies. You're buying and selling Microsoft, Apple. So again, manage risk, okay? And for the first thing, try to, first rule of thumb, try not to lose that much money. And second rule of thumb, then try to be consistent. And then if you could do those things, you're on your way to making a living. But a lot of people are like, oh, I got to make a living tomorrow. Well, if you're in a race, it's going to be very tough, because you're going to take a lot of risk. And like I said, that's basically jumping in the boxing ring and saying, I'm ready to take on Tyson. Okay. Good luck. I hope, if you're doing that, I hope I'll see you in the channel for for a long time, but probably, you're not going to be around that long. I hate to say it, but, it's tough love. It's truth. I wouldn't even trade like that. And I'm trading pick positions. I would not trade. I don't treat my capital, I treat my capital with respect. Okay. I have to make sure that if I'm taking a position, it's a small position. Now, before, when I was day trading, I was, making stupid little trades. But I was not trading this with like 2,000 shares. I wasn't trading so crazy. And I always knew when I was going to get out. Okay. Which is one of the biggest rules when you're trading. When you first get into this market, you got to know when you're going to get out. That's rule number 1, guys. If you don't know when you're going to get out, please do not make the trade. All right. That's just my advice. You can do it, but I highly, you're setting yourself up. Okay. It's best to know when you're going to get out of the position before you get in. Okay. That's what kills most people. They don't know when to get out. They have no idea when they're going to get out of a position. And so, it's hard. I mean, anyways, I'm going off on a tangent, guys. I'm sitting here talking away, and not even looking at the chat. What's up, Mr. Working? What's up, Sparrow? I'm scrolling back up on here. Sheeny, I thought it was just buy low, sell high. Yeah, man. Most retailers, they try to do that, but they buy low and then it moves down and they buy lower and then it gets a little pop and they sell, and they don't sell at the high. That's most people don't make money in the market. Not without a big fat face mask or a tight stop. See, stock. Love the stream. The man is talking truth. Thank you, Holmes. I appreciate that. The other thing I would say, guys, is you got to read. You absolutely got to read, guys. If you're not reading, at least find some very good YouTube channels, and do audiobooks. I mean, nowadays, damn, just get an audiobook. If you don't want to read, just get an audiobook. But you got to read Market Wizards. If you want to make it in this game, you have to read Market Wizards. You have to read the greats. Because spending that time just reading and downloading that information into your brain, you're going to be able to think about these things, and you're going to see a pattern among all of these traders. They may trade differently, but you're going to start to see key ingredients that they have, key characteristics on how they trade and how they manage their risk and all of that stuff. And everything that I'm saying here, this is not my own wisdom, guys. Okay. This is the wisdom of Mark Minervini, stock market, an amazing trader, 2,000 something %. Okay. Guy's written book. He knows what he's talking about. Those we want to kind of tap into their brain. We want to tap into their knowledge. We want to see how do they do that, and learn from them, because there's so much noise, whether it's the news, whether it's, friends around us, whether it's, social media channels. There's a lot of news, but you want to read. You got to get in the habit of reading, and you got to read some of the top books, Turtle Traders. You got to read about all these guys, and start seeing how they're doing it. Okay, because they're telling you. That's the other thing. A lot of people are like, oh, these whales. I'm just a retailer. Yeah, but you can. Not all whales make money. Okay. But the big whales who do money, the big hedge funds, Ray Dalio, you can go on YouTube and watch speeches that he's given. It's almost like reading some of his material, because a lot of his interviews he's talking about his books. But you could tap into Ray Dalio's mindset, and you could understand how he's thinking. You can do that with I'm not a big fan of Warren Buffett, okay, but a lot of people like seeing Warren Buffett speeches and whatnot. I'm more a fan of, I don't know if you can see it back here, but Soros. I'm a big fan of Soros, even though he doesn't really trade anymore. I know he's a controversial figure, but say what you want about the guy, amazing trader. And he's made some blunders, but he's made some really good calls. So, I want to read, I want to read these guys. I want to do that, because the more you do that, the more, again, it's kind of like if you just start a restaurant, and the guy who has, franchise and start off with one restaurant. Now he has 500 restaurants. He lives in the same town as you. And he's wrote a book on how he basically built his restaurant business. Who of us would not read that book? If we are in the restaurant business and we are just starting, and some guy or girl up the street who is, highly successful in the restaurant business, years of experience, they're writing it all in a book and they're telling you how they did it. Who would not read that book? Unless you're lazy, you're not going to read it, but you should. So I highly recommend, you got to read, guys. I mean, it's just, it just in life in general. I tell my daughter all the time, One of the things, the smartest people I've ever met, they all have different ways of doing it. The smartest and most successful people that I've ever met, they've all done different things. But one thing that they always do, I notice, they read like voraciously. I mean, they just read. They read so I don't even know. They read. Okay. They read. And so we want to get into that habit, whatever we're doing in life, that's just a good, solid habit to get into. Okay. Whether it's for enjoyment or what else, you just got to get in the habit of reading. I mean, I guess you could even read on the, on your iPad or whatever, but get in the habit of doing that, especially reading some of these guys. And I'm going to make a list with my favorite books. Okay. Cause I have many. And I think if I could, make my like a top 10 list, I think that would help a lot of you guys. Okay. Cause there's just gems on everything that I've learned. It's not my own, I have my own things that I've learned for sure. Been doing this a while, I should know, but a lot of stuff that I've learned and kind of made it my own, it's from reading these guys, so I'm grateful to them for writing these books and telling me how they did it. Crazy that they just do it. Shini says, I am lazy. That's why I like trading. Yeah, well, here's the thing though, Shini, if you don't have the time, because we have kids, I still make time to read, regardless. Even with Eleanor, we kind of both read at the same time, and we have we just kind of take time out of the day and we read. But regardless, if you can't do that, you can still, with YouTube, it's amazing. You probably can get away with not reading because, again, it's just there. You're basically hearing from their own, you can watch interviews with the market wizards. You can, check out the turtle traders. You can see them actually doing it, and then probably come across some guys who are actually, trading, like again, Sparrow. She has an amazing, you learn a lot from Sparrow. Her channel, Stock, learn a lot from Stock, how he did it. Again, there's gems everywhere. You just kind of got to just kind of watch, learn, and then you'll see some gems. So you don't have to, no, I'm not going to, you should. I would never discourage reading. You should. It's just a great thing. But if you're not reading, if you want a shortcut, I guess you could do like a Cliff's Notes version and just go on YouTube and, watch some of the interviews there, see how they're doing it. You could do that. I do that too. I read and I do that too. So it works. Yeah, Twitch has been amazing, man. Twitch is good. Twitch is great for community. Twitch has been amazing for community. That's one thing that I have to say I love about Twitch. There's some, really good community here. And everybody seems to help each other out. So a lot of different ways. Stock says the stock market is like a beauty contest. The price is the prize. Everything is in the price. There we go. Some quotes. Treat those books like reference books. Highlight them, revisit them. Yeah, man. I read some of these books. I've read them multiple times, I try to read a lot of these books, I revisit them all the time. I'm due to revisit, there's a couple. I'm reading some new books. But yeah, even if you're reading like 5-10 minutes a day, in a year, you'll finish a book. Maybe sooner than that. Okay. You know what? Get a good book on trading. Put it in the toilet. Well, not in the toilet, but put it in your bathroom. Okay. When you go to the John, grab your book, read while you're doing your thing. Okay. You'll finish the book in a year. All right. There's my gem for this evening. All right. That's funny. Hold on. What's up, baby?
I'm eating something.
All right. So, And the other thing, guys, I want to say here, you know, don't be offended by anything I say. I appreciate you guys. I appreciate my chat. I respect all of you guys. So if I say something that is at odds with the way you're doing things, it's not a personal attack. Okay. I mean, you have to say that these days. There's a lot of very sensitive people. You can't say something without, you know, offending somebody. I mean, and I don't want to do that in my chat. I don't want to do that to you. So this is just me really just speaking my mind. Okay. And you guys take it how you will. I hope, you know, it adds to your life. I hope it betters your trading. Now that I'm streaming, you know, regularly again, I'm really looking forward to that. So stock is, let's look at stocks plan. And then actually what I'm going to do now, guys, is I'm going to close the queue because I'm probably going to get out of here in a little bit. Is Sparrow trading yet? I mean, is she trading? Is she on? Oh, she's not on yet. I kind of wanted to wait for Sparrow and then go back into her room. So I might have to get out of here a little early, guys. But I'll be back for Sparrow's room regardless. If you aren't following Sparrow, follow her. And we're going to take the party over there. I love going into a room on Friday evenings and hanging out. So, but I'm going to close the queue now. And then probably going to dip out in a little bit. Yeah, I'll dip out in a little bit. Like I said, I wanted to raid Sparrow's room, but I got to head out. So I'll come back and hopefully you guys will come back too. Yeah, that's that. Okay, guys, so let's see here. Stock is asking about WMB. Williams companies. Energy, oil and gas. Let's see what we got. Okay, so nice little uptrend. Okay, this is really nice. I like this. MACD, really good. Yeah, look at that. Really good. It's in the upper chamber of the channel. So the question is when to get into this thing. And this pretty much was when it was peaking out of the highs. 29.65. Okay, that's a low here. All right, so maybe I would put a stop there if I was in it. Bullish. Okay, look, I'm bullish on WMB for sure. I'm just trying to find, you know, where would my entries have been on this particular stock. Well, this would have been an important day here. So if you got in on this candle, okay, that's pretty much like a little breakout here. Doesn't have great volume. I know you can see that stock doesn't have really great volume, but good movement. Okay, I mean, pretty good movement, breaking through the 50, really nice. This is WMB is it's not in the S&P 500, is it? Oh wow, I thought this would be in the S&P. Anyways, okay, this is not in the S&P 500, but still, this would have been the trigger. The first, February 1st, this would have been the trigger. If you got in here, you put a 3% stop. You'd basically be up like 0.5%. Okay, you wouldn't be up much, but still, you would have moved your stop up a little bit more. So this is trending nicely. I like it. I like it, stock. And again, the risk for me would have been like, yeah, 3% off of this, off the first right here. This day would have been where I would have kind of got in. So if you miss a boat, you still could have kind of got in a few places here, you know, because it pretty much has been sideways. Now it's trading higher. So you would be buying it about 0.5%, you know, more than what it traded. So yeah, bullish, man. Are you in this one, stock? Sheeny says, completely understand. I know someday I will probably be wiped out of the market. My strategy and rules have been melded around a lot of the information I've taken into key and then ran with it. It works for me, but how long, I don't know. It's not tried and true. I'm going to close out the live stream talking a little bit about that, Sheeny. I think that's very important. Stock says, no, you're just watching that one. Okay, cool. I like it, man. Like I said, I wouldn't have not felt bad if I would have been on this day here, got in. So we'll see what it does. It's been lagging the group, very hot group, good balance sheet. Cool. Yeah, well, I think it's going to move higher. I mean, who knows, right? I don't know. Nobody knows. The market's going to do what it wants to do. But it seems like a pretty good risk to reward on this one for the bullish side for long. So here's the thing, Sheeny. There's a book. I know you don't read, but maybe you could get an audiobook. Maybe you could look a video on it. Okay. There's a book called Come Into My Trading Room. Yeah. Come Into My Trading Room. Want to make sure I had the right title. Okay. The right exact title. This book is written by Elder. Okay. Dr. Elder wrote this book. If that's how you feel, that you feel like someday you'll be wiped out, you should look and read into that book. Okay. Take all of that information and do what you just told me that you did. Your strategy and your rules have been melded around the information you've taken into key. Read that book, take that information into your strategy and add it. Okay. Add it to your recipe. It will help you. It will help you stick around. It'll help you to understand risk. And that is what will keep you from being wiped out in the market. Okay. Being wiped out is really just a matter of, taking on too much risk. I mean, it's simple as that. Just like how I ranted on earlier about risk, reward, buying expensive stocks versus buying penny stocks and all this and all that. It's all a matter of risk. Okay. There's a reason why whenever I look at a stock and I'm looking at the risk and it's like above 5%, I'm very hesitant. I don't like that. If there's another stock with half the risk, I'll take that. Okay. I'll take it. I try not to do that. Okay. Because that's the only thing we can control, man. That's it. All we can control is our risk. We don't know how much we might have, we might be calculating Fibonacci here and no, okay, it's going to retrace to this level. You hear me saying that. But the market doesn't have to do that. The market is not going to do it just because I've calculated on the Fibonacci at the 61.8 that's retraces there and I'm going to take the market is not looking at that. The market is doing what it wants to do. So we have ideas, okay, but we don't really know where the market's going to go. It'll do its thing. Okay. It'll do its thing. And we are only going to be basically fighting the market, or it's going to be in our favor. And if we're fighting the market, that's why I say all we can control is risk. And just like how me and Stock, how I said me and Stock were talking about, and you were there, I think you were in the channel, all we can control is how long are we going to stay wrong and how much are we going to stay wrong. Okay. And hopefully, I mean, the key to this game is small, minuscule. Okay. It's better to take these small losses while you're learning than take large losses. So a lot of people might, there's a lot of people who fool themselves. They trade and they're actually losing money, but they're still trading. And because they've landed like 2 or 3 home runs, they're like, oh, you know what? I'm making money. Well, if you don't have a trading journal, first of all, you don't really know how you're doing. Okay. You don't really know. But you may be fooling yourself. You may have taken like a 20%, made a 20% return, but you have 20 trades that are down 5%. You're not, where is, if you were to look at it on a chart, what way is that chart going? So, I think you have the, I think you can make it in this market. I really do. Just from, hanging out and whatnot, I think you could do it, man. You seem like a pretty disciplined guy, and you're smart, you're studying the market. I don't see, there's no reason why you can't, there's no reason why a lot of us can't make it in the market. The biggest thing, like I said, is our ego. Okay. When we're wrong, we tend to not want to be wrong. All right. And we stay wrong, and we should not do that. You do that, you're gonna, I'm just repeating myself here, but hopefully it's helping out some of you guys who are watching. Like I said, if you come into my channel, guys, you're not going to see my positions red for very long. Okay, you might see them here for a little bit, and then soon they will be out of the screen because I'll get rid of them. Okay, all I need to know is that I was wrong. I'll accept it. Okay, and the ones that are right, I'll let them run. So that being said, guys, it was great connecting with you guys. It was awesome doing this live stream. Really enjoyed it. We went through a couple of good stocks that we ran through, and charted a lot of good, charted a lot of stocks here. I don't even know how many we charted, but it seems like at least 10. Could have did more. As far as my trading, guys, it was a crazy week, but it was a good week. Okay, really good week for me. These are my positions here. Very transparent. This is what I'm trading. Okay. And out of my book, just 3 of, well, this is an option. So the options, the options are just kind of experiments right now. So I'm not an options trader. Okay. These are just for like my own, just trying to take an option here or there just to basically try a couple things. As a trader, you're always going to ask yourself, how could I be a better trader? And I know for me, if I could figure out if there is room for options in my trading style, obviously that would make me very profitable. So that's what this is. Okay. Small risk to see if options work. That being said, my positions that are down is American Electric and Procter Gamble, both trades that I took today. Yeah, those were new trades, Procter and Gamble, and now AEP. That's AEP has been. I got that one around noon. So, anyways, always let your losers be small. Okay, don't stay wrong for very long, and make sure that your winners are much bigger than your losers. That being said, let's go into the chat. Stock, thank you so much, man. Appreciate the compliment. You could take 5 losing trades and hit 1 good one and make it up. Yes, you can. That's how you should be doing it. Okay, you could be very profitable just, being right 30% of the time if your winners are much bigger than your losers. You can be very, very profitable. It'll blow your mind how profitable. But a lot of people have it the other way. They think that if they don't have a high win ratio, then they're not going to be it's not about the win ratio. It's not about that at all. It's about the size of your winners and the size of your losers. Anyone can make a decent return in the market as long as you manage risk and understand price action. P-Stash, 100%. Absolutely. Absolutely. Don't take the market personally. There's another one, right? If we're wrong, guys. There's nothing wrong with it. Okay. We are not geniuses. We're not oracles. We're not gurus. Okay. We don't know what the market's going to do. We just have all we know is our odds. That's all we can really, what are our odds? And take the trades that have the best odds. All right, cool. All right, Stock, good seeing you, man. You have a good weekend. Everybody, you guys all have a great, amazing weekend. I'm going to be streaming again either Monday or Tuesday, okay? And I'm going to be doing, I'll be going through the scan. It may be maybe Sunday, Monday, or Tuesday, okay? I haven't nailed down what is going to work best for my schedule, but it will be one of those days, and it's going to be an evening stream, all right? This is going to be a, kind of like a, I don't know, night class, night school, whatever, okay? But I'll be, in the evening, I'll be scanning the entire market of the S&P 500, so I'll be scanning 500 stocks, be scanning the Dow, and basically be looking at what's looking good for the beginning of the week. And I'll be doing that stream again Sunday, Monday, or Tuesday, one of those days. And then again on Friday during the final hour, I'll come out live and trade with you guys, trade with my community, and we'll see how we did, see how we did for the week. So start off connecting with you guys, and then end the stream on Fridays and following with a follow through, see how the market did. Did our positions work out? Which ones worked? Which ones didn't? Which ones did we add to, and all that. My best position right now is probably going to be MetLife has been really good for me. Okay, so this is one that I'm going to be looking at closely, because who knows, maybe next week it decides to kind of take a rest and come back down, and I'll get out. But so far I've been scaling into this pretty seriously. So Met is my winning position right now. This one's has done well. So we'll see if next week it continues to move higher, or if it decides to pause. But when I do my stream, we'll see. Okay. But MetLife is the best position. I want to finish out the stream by talking about what's my best position. What's the one that I really like, and it is MetLife. MetLife has been pretty good. So, Stock says father-daughter dance this week. Got to get a haircut. Yeah, man, that's for sure. That's for sure, man. That's awesome. Wow, that's awesome, man. I could only imagine when my daughter gets to that age where we're doing these father-daughter dances, and that's great, man. But that's awesome, dude. You have a great time. Enjoy. Look, the most important thing is family. This is great. I love the market. I love this. This is my game. But the most important thing is family. All right, that's the most important thing. Not the other way around. So, Stock, you have yourself a good time, man, and you guys enjoy yourselves. Peace Dash, good seeing you here, man. It's nice to be back. Hopefully hopefully you had fun, and I always try to give a few gems, but definitely awesome having you in here, man. Oh, by the way, guys, next time I stream, one of the days that I stream, I do have a Discord. I I want you guys to follow me, okay? If you are a regular in the channel, follow me on Discord, because if I'm not going to be streaming on Monday or let's say Sunday night, I'm going to be streaming, I'm going to announce it on Discord. So if you guys want to come and hang out, that's where I'm going to put it out there. So let me give you guys the link, because I do want to connect with you guys on Discord. That's very important. Let me see here. Let me invite people. Let's copy this. And let me see here. All right, guys. So here you go. follow me on that. Follow my channel on Discord. And I also have a voice chat. So probably sometime in the future, maybe next week when I stream, I'm going to be having you guys on the mic, and we'll be talking, and it'll be nice. Instead of hearing the talking heads, we will be the talking heads. Okay. So follow me on that, and maybe we'll be able to hang out on Discord and do a voice chat while I'm streaming. That would be pretty fun. I'm going to try to do that at least. The only thing I don't like about that is I need to wear the headphones, and I don't always want to wear the headphones. But follow me on there, and yeah. Peace and love, guys. I'll leave it there. Think positive thoughts. Okay. All that those negative thoughts, clear them out of your mind. Don't let them have a parking space, and know you guys can trade. Know you guys that you know that you can make a living at this, and you can be a successful trader, and hopefully I can help you guys on that journey. Okay. That being said, let's do a raid. All right. I'm going to go ahead and raid into somebody's room. I'm going to raid into a game. Katie Girl. Katie Girl is I wandered into her stream one time. She was streaming Cyberpunk. I love Cyberpunk, and she was just streaming, so I kind of wandered in there. She was pretty chill, pretty cool. Haven't been in there too often, but I'm going to go ahead and raid her channel since nobody is on right now. But I will be back later on this evening. I'll be in Sparrow's room. And I'll be in Sparrow's room, and that would be a lot of fun. But for now, guys, I'm going to raid into Katie's channel. And she's doing party games. Jackbox. Party packs. That should be fun. It seemed like a pretty good channel. So going into a gaming channel, not a stock or financial, but this should be pretty cool. So everybody have a good week. Let me give a shout out to everybody. Man, we had a lot of people in the room. Some of them are bots, I know, okay, but I'm going to give them a shout out too. We got Fish and Magician, AC Borg 13, Android Exodus, Anyto, BH Rod, Chicka Bow Wow, Commander Root, which is the bot, Flash Joe 5, Homeschool, I Schooled 86, J Jared, Kipsis, Lakeside Streams, Lori Pub, Lugdor, Manja, Marcos, Nevilus, Owen Nimzo, P-Stash, Rabid Beastman, Sethin, Spike Trap Claire, Stock Market Plan, Shinigami, Tesla Boss, The Elliot, Tiz Cloud, Vedfis, Virgo Pros, and Whoop Whoop. Guys, thank you so much. I appreciate you coming in, hanging out with me, and watching me trade. I will be back next week, but you guys are the reason why I'm able to do this. You're the reason why I love doing this, and I appreciate you guys. So you all have a good weekend. You deserve it. You deserve to have an amazing weekend. And until that point, I will see you guys again, and we will go ahead and raid to Katie Girl's channel and take it over there. Peace and love, guys. All right, so we got 10 people ready to go. We got 21 people ready to go. And let's head over now. And yeah, we'll go ahead and go over now. Peace, guys. I'm out.